So in 10 minutes time now at the bottom of the hour, we see the release of the weekly EIA inventories numbers. Crude oil inventories forecast is for a build of 1 million on the prior build of 1.448 million. The range sees a build of 2.085 million to a draw of 2 million expected. Gasoline inventories forecast is a draw of 3 million on the prior draw of 5.737 million. Distillate inventories forecast a draw of 0.5 million on the prior draw of 1.559 million. And inventories of crude in Cushing, the prior was a draw of 1.228 million. So looking to the release of the private API stock change numbers last night, crude showed a build of 4.593 million, which was higher than the expected build of 1.17 million.
Morning, guys. Is stream working? We good? All right, cool. Good morning, good morning. Quite a bit of a move pre-FOMC. Unexpected. Not bad. Yeah, usually the market is sideways as hell. What's up, CP? Testing the 60 again. See if this bid can hold or if sell side steps back below for this rotation.
So in 5 minutes time now, at the bottom of the hour, we see the release of the weekly EIA inventories numbers. Crude oil inventories forecast is a build of 1 million on the prior build of 1.448 million. The range sees a build of 2.085 million to a draw of 2 million expected. Gasoline inventories forecast is a draw of 3 million on the prior draw of 5.737 million. Distillate inventories forecast is a draw of 0.5 million on the prior draw of 1.559 million, and crude Cushing inventories, the prior read was a draw of 1.228 million. Keep in mind, last night we saw the release of the private API crude oil stock change, which showed a larger than expected build of 4.593 million on the forecast of a build of 1.17 million.
Where we look for a reoffer, see if sell side's stronger here. Off this look below, need to see bid really step back up. Sell side sitting here.
One minute remaining. I'll be leading with the EIA crude oil inventories.
.30 seconds until near 15s and news. Offer is still just sitting at 60 to 70. We're just watching to see if they can push this thing down, down into that 30 to 40, or if
10
we can
seconds.
bid back up and recover this range. So far, no interest.
The build of 1.745 million, a build of 1.745 million, higher than the expected build of 1 million. Gasoline inventories, a draw of 0.527 million, a draw of
Risking off 1.
0.527 million, which was higher than the expected draw of 3 million. Distillate inventories, a draw of 2.812 million, a draw of 2.812 million, which is lower than the expected draw of 0.5 million, while inventories of crude in Cushing were a draw of 1.009 million. That's a draw of 1 million. Seeing some strength in WTI crude prices here following the larger than expected storage build. Keep in mind, though the build was larger than expected, it was still lower than the private API stock change number last night, which did come in at a build of 4.593 million. So at the same time, we saw a report drop. Google and Apple hit by twin EU rebuke amid big tech crackdowns.
So no real change yet. We got our bounce off of our demand tier on footprint. We can see it. It is highlighted in green. It's also just our yellow zone that we've already mentioned about the pullback off of the failure at 60s. For any more upside, we're going to need to see a very clear reclaim of this 60 to 70 area, or it's just a rotation back up to this POC from sell side and then push back down, right? So no change in our downtrends. We're keeping an eye on RTY and ES as their POCs have now shifted up here. RTY is holding POC, right? It is right here at this 86, 80.6. And for ES, POC has shifted above us here at this 708.50. So if sell side is now above and we can't seem to sustain, right, like a move like this, this is what you would look for on a bullish move, right? A recovery of this POC shift and then a continuation up. If this fails, right, and we can't get back over and show any interest, then we're most likely looking for a move that looks like this for return back down to our VWAP with a look for a potential relief bounce here, and then maybe a bounce point like this, and then a full rotation back down to our POC shift and opening range. So these are the two things that I'm watching. Just watching to see how we interact here at 708.50 on ES, where our POC is shifted. See if we can reclaim it, or if this is going to hold offer. If it does, then we're going to be looking for a downside move, targeting this VWAP area first, and then the POC shift and opening range, day open area next if this doesn't hold. RTY is still just oscillating, maintaining our low.
According to the EIA, US net imports of crude oil fell in the latest week to the lowest level since October of 2023.
All right, my bad.
White House reports that the Trump and Zelensky call is happening now.
Oh boy. Just what we need.
And US commercial crude oil imports fell in the latest week to the lowest since March of 2023, according to the EIA.
Yes, still just maintaining our oscillation between 708 and 703. Super tight. Just waiting to see if we're going to get the break below and then offer for the rotation down the VWAP, or if this low is going to be able to hold and rotate back above this POC shift. Again, nothing has changed there. Russell, again, just oscillating, stuck at our halfway back, holding our low at 80.6. ES flat. Sorry, NQ also flat, stuck between the 60 to 70 offer and this bid that's taking place at 40 into our demand. For anything upside wise, we just need to see the recovery back over this 70.75, and then we can look to come back up and retest this supply. I personally am under the impression that we have more downside with this POC shift, right? We are building prices below POCs, right, which is a downtrend in nature. But we're going to need to keep an eye on what happens here as we come back down into this demand in 230s. So nothing has changed in my overall idea of shorting that 60-70. I just took off another one contract there, one runner left. But if we do end up pushing below this and we flip this offer from supportive here in this 30 to 40, then we'll do the full rotation down, right? So this is just a return back to our opening range and day open area on NQ. So that's what I'm kind of hoping for my final target. We can see that also playing here on ES. For the breakdown, it's taking a bit longer than we wanted, but it is happening. So we're just keeping an eye on this area on ES for the push down.
Israeli minister warns of further steps unless hostages are freed.
Watch to see the offer here. See if we can get that last leg down.
Cats saying the evacuation of Gazans from battle zones is to begin soon. Air Force attack against Hamas was, again, only the first step.
All right, see what happens. Uh, 15 here is PVZ, POC, and our VWAP. So this is where we expect a bit of relief, but we're watching to see if that offer steps down into that 40 ledge, just like we have drawn out here, expecting a little bit of a bounce, and then we watch to see if sell side's now sitting here. The reason why we can look at this area as a point of interest is we had our bid show multiple times. So we want to see if this bid is going to flip to our offer, right? Is this now going to be defended? Is this a shift of value, right? That's kind of the idea. That's why we can look for that secondary leg from this shift of value that we saw at 60. So we're just looking for a continuation, which is just a lower high, right? So keeping an eye on that, seeing if that can happen, and that will lead to our next leg down, if it can. RTY is still oscillating, coming back down to our low of range. ES coming into target here now, off of our failure to hold that balance. We got that shift of value coming into our VWAP now. $20 till new 15s. And same thing on ES, right? We need to watch to see if this is going to be our bounce point. A lot of potential here for relief to happen at this 95, 97 on ES for rotations back up to at least 703, 702. If we push below this, right, we're going to be watching for the same thing that we've done on every single one of these pivots, which is where this buyer was. If we push below, is it now our offer? If it becomes our offer, then we get that secondary leg down, right? This is our final target, just day open POC shift. RTY finally breaking our range, watching to see if it also shifts value from buyer to seller. Were people able to follow along? I feel like I've been doing a pretty good job today with our zones and what we're looking for. Everything's been pathed since open. Secondary leg happening now and in Q. We're watching still to see if ES is going to be able to breach or if this is going to be able to hold. Watching our Russell as well. RTY testing its halfway back. ES bouncing where we thought it would. And Q coming back into this pivot. Lots of sellers above into 40.
Italy's industry minister says we will ask the EU to prepare compensatory measures for sectors hit by US tariffs.
Huge push down. Take a little risk off. You are playing off of this. Looking for one last leg. Yes, following pathing still. No change. Need to see the shift below 95s and then reoffer, or we're just going to bounce here again. Sorry, RTY at our pivot here at 80.6. And NQ at our previous low. Looking to see if this POC from this candle that we're currently trading can hold offer for one more leg down into our value low on the daily profile into 788. Mm-hmm. 798 is your void fill off of the upside candle, so it might be a good first target, but anything in here, just back into our opening range, is going to be solid, just like we talked about above. Your 15-minute VWAP is sitting at 779, so I'd like to see a push down into this yellow zone. But this first primary edge, our opening range high of our 32nd and our ETH high, should definitely be where you can start looking for some potential participation. Buyers sitting at 800. See if they pull. Again, that's just our 30-second opening range high, so it makes sense for bids to be there. You should be mostly flat now that we've done our full push down to our lower target. Now it's just about holding a runner if you have the ability to, and seeing what we do into our opening range, right? Yeah, no problem, D-Rock. And once you get a bit more familiar with what, like these zones, and can start seeing them yourself, like these trades really make sense. It's nothing, we're not doing anything crazy here. It's just flip a value. Gives us a little bit of an area to work with, and we have an understanding of like what our invalidation is and where we're headed, just based off of where supply and demand are. That's all. Like we can see these areas very clearly on our delta profile or our footprint. You can see the shifts of value, you can see where that absorption is taking place and where we're expecting these bounces, right? Just based off of where those deltas are. And it's just the exact same zones that we've got on chart on our 15-second. Yes, retesting VWAP rejected, pushing back down to our low. Russell still very flat, very dependent on our NQ and ES pivots right now, with Russell not really doing anything significant. Our PVZ value high, holding as resistance, right? Just this flip from our bid to our offer, still just maintaining, coming back down into our value low on the day, as well as our ETH high on NQ. We're still just watching to see if at any point we are able to get this flip. This is what we're watching for. Can our offer start to stabilize right at this 800? If offer can start to hold, or sellers, whatever you want to call it, can start holding this like 800, 810, and we can't get above, then we should get our rotation down to our 775, 798, right? Our 779 area, right? Just this low. And then from here, it's just going to be a battle of can this shift value, right, from this POC. This is our value high PVZ POC right here. This is our value high edge, right? This is just PVZ. So we're holding our value high. We're expecting a rotation down to POC if value high continues to maintain its resistance. That's just a basic volume profile play. So we've entered back into value, and we are now holding our value high edge as resistance. That's what this line is representing. If that continues to be true, and we are unable to build back above, we should expect that price is going to then rotate through value, and that would be positioning us for this move down into that low edge. If that occurs, we can then look for this as our target, and if it goes resistance, then we can look for that rotation to push down to our value low edge, which would be into here, right? So this is just the same thing, watching how our interactions play out here, and we'll just keep an eye on it. We know that current value low is here on NQ. So this is our target. It's been our target for our downside push. We're bouncing and chopping here. We need to see how this balance between these two zones continues to play out. Our next short is going to occur on this look below, right? Or into this high edge, and then the look back in. Right now, you're kind of in a position where we just are expecting chop in between these two zones, and we need to see how we either play into this area, and if that leads us to this downside move, Or if we can push below this lower edge and start to hold it as resistance, then we get that next leg down. Expect chop here. It only makes sense. Is our overall downtrend still persisting? Yes, right? Like there's been no shift. So you shouldn't be looking for anything other than a long scalp from our value low edge back into this zone here where our last seller was. You shouldn't be expecting more upside than that until we can recover this pivot. If we can recover this pivot, then it's just a very clear rotation back up to 54s, right? Which is what it's our daily POC. But until then, like you should expect balance. So you should expect offers in here or sellers, whatever word you want to call it. You should expect bids into here. We're looking for a shift of either one of these zones for a directional decision. Hopefully that clears that up. I'm thinking that our next move is going to occur when Russell loses momentum here into this top edge, and then we can watch to see how we'll basically have room from this top edge back down to this bottom edge, right? And that should give NQ also that room from this seller that's positioned up here to then push back down if we're going to continue to maintain this overall trend that we're in, right? So we're just watching for Russell to lose momentum into our high edge for that, for a catalyst for NQ and ES to also show weakness. That's my current kind of like thoughts on everything. But right, like we rotate back over the sellers, show no interest, recover this, and shift value back up. Then we go up, right? Like just play around the pivots. I'm thinking NQ has a little bit more upside into 830. But if this flips here and we show weakness below 10s, then maybe I'm wrong. But I think 830 is definitely what we're looking for. And that just goes with what I was talking about before. Just push into our top zone. And then we watch to see if bids can start to, we can see a secondary bid step in, or if sell side is like, hey, we're still here, and then we rotate back down. A recovery of 830, 840 is just so important for us to shift value, or nothing is shifted. And downtrend persists. I think this should be your first risk off into 830 if you are scalping. If we can start to show interest above 830, might be able to look up into like 840, 45, 48, right? But we got to show this flip. I'm thinking regardless, we get any sort of push, we'll then look for some sort of bounce point in this area, some sort of retest to show this flip. For sell side, same thing, where we're looking to see if they absorb here from this area, and we're going to be watching for a shift back into this zone for any sort of sell. Remember, like our overall target here is just how we interact into this POC, and from this point, does this pivot then hold for a rotation through? But we should be able to retest this area and see if it's going to build as supportive, regardless of which way we go. For ES enjoyers, same thing. We were able to recover our VWAP as supportive and our zone. We're pushing up into first target here, which is this 704. If we can build over 704, it should just be a retrace to our POC shift up at 708, 709 area. And then we watch to see our interaction here, right? This is our POC shift. But first target is here at our 70375, 704, whatever you want to call it, and we watch to see how we interact. This is, again, just what we talked about on NQ. We're watching to see what happens in this 830, 840 area. Can we build here above these sellers? Can this flip? If it can, then we trade to our value high, right? If it fails, then we're going to have bids who are offsides, who are trying to break us out of this range, and then we look for the rotation back into balance and then play through balance. Next target here into our 60s, where we took our original short. If we can build above 6070, then we can rotate further. If this holds, this is just our original short location, and we will watch to see if offer is sitting here, right? This is our value high edge. We are watching for our interaction. If we can hold here and build above POC on retest at our 50, we can continue higher. We should expect a little bit of selling pressure into the 60 to 70 as we approach, but we're going to be watching to see if POC can now hold as supportive for this rotation higher. If so, right, then we go back up to our supply from our original short. Just a full rotation back to our day open, right? And then a rotation back up to our 30-second opening range from, I think this is yesterday's or 2 days ago. But this is just our value edge here now. So watching to see if we can build here above our POC. If so, then we are just trading right back into our supply, into 80s. Yeah, no problem. Congrats on passing some combines. All right, and I'm gonna just go over our footprint chart with how we develop these zones and how we can kind of predict these areas, because I think it's super important for you guys to be able to visualize this so you don't think it's just like black magic. Do we see our previous interactions here? Do we see how bid stepped in here? How this was our seller where we were absorbing before? We then showed an active bid, step in, hold this, and then it'll rotate us up. And then we see absorption here into our highs, and then we see our push back down. This buyer got absorbed, sellers took advantage, started to aggressively approach and push down. This then became our offer area. We then rotate down into our target. This was our short target here, where these buyers were previously, into our 790-800 edge. And then we see sellers really trying to push down, but failing, so they're getting absorbed here just into this buyer. We then see a secondary buyer step in above these sellers, allowing us to then rotate up. And we're now seeing the same thing before, where these buyers are desperately trying at the 60 edge that we were just talking about to rotate us up. What's above us? Well, all of these buyers who were absorbed previously. So we should be expecting some sort of rotation here where we either are building in this upper balance and between this supply and this new demand, or we're going to hit our heads on it, right? And then having to rotate back down to test again in this 40 to 50. Unsure as of yet. All we know right now is that there's clearly a seller above into this 60-70, and we know that there's a buyer, a new buyer who's trying at this like low 50s, low 60s, high 50 area. So we're watching to see if this bounce is going to occur right here.
A focused ground operation in Gaza.
And that's it. So it's just trading between where our known buyers and sellers are, and then playing around those rotations and watching to see if participants step in or if they fail, right? And that is what our zones are. So as long as price is holding this low, we know that price is going to rotate up to this high. From here, we understand that this is a balance area. If price is able to bid above and doesn't sell here, we know that we're then rotating in between this value here, right? It's just, we are creating a logic for our trades. We understand where we are looking for participation, and that allows us to then have a system in place of where we can put on risk and where we know we're wrong, right? And if this seller up here
to create a partial buffer between North and South Gaza.
If the seller up here does not hold, right, we'll be looking for the same thing that happened here in our mid zone from our 30 to 40, where this then goes supportive on our retest, and then we'll look up. But until then, you should be respecting that price is trading in between this area. We understand where our auctions are taking place. So this is that area that I was talking about on Russell where we're going to figure out if we have a loss of momentum or not. This is our high of this oscillation into our 85 to 86 area, right? If this fails here at our value high edge and VPOC, then this is going to be the top, and we're going to be looking for rotations back down to the bottom of our oscillation, right? This is our current oscillation or our range in which we are trading. So if Russell is at the top of its momentum, its area, then and we get a loss of momentum, while NQ and ES are back to our targets, right, where our original sellers were, this is an area where a lot of selling pressure can start to step in because we have nothing pushing up. We have full market participation showing weakness. Weakness results in larger, more accelerated moves down because there's no one pulling on the other side. So we have full participation in one direction. This 45 is about as low as you'd want to see this go, or it's just going to be, again, a rotation in between our two zones. Our 60 to 70 seller is still positioned there. Watching for Russell to potentially find a low here, at least short term, into our halfway back. If not, then we'll do the full rotation of our range. Yes, also into VWAP and halfway back, and NQ into our pivot zone from our failure at our opening range low, 60 to 70. I'm expecting a slight bid here at 35s, but if that fails, then it's just going to be a rotation back down into our VWAP edge on NQ. Keeping an eye on it. For any sort of real sell, right, we're going to need to see a step below this and then an offer into this area for a continuation down. This is where I expect, again, some bids to try to be, and then it's just oscillations in between these two areas, right? It's just our upper zone. That's all we're doing. It's our halfway back of this big candle that we just got. Are we able to maintain our value low of this candle? If so, then there's no shift in our rotations, right? We're just looking for something like that. And we'll wait for Russell to do the full oscillation down. If it holds this low, we expect relief in the market again. We expect that this then occurs where these things then bounce. Right? Because we don't have the selling pressure anymore that we need for continued downside. So it's a very easy area to anticipate where we can look for a little relief. What happens from that relief gives us our decision for our next move, right? So let's say we find a little relief here. Okay, well, what are we going to need to see? Well, we're going to need to see a step back above this and then show a higher low for us to be excited about a long. What happens if from this relief, this edge now holds as resistance? Okay, well, that's a first sign that our seller is still positioned here and that we should be looking for a continuation down, right? So this relief lets us know what we should be doing around for our next trade. We are anticipating these relief areas because we've already put our zones in of where they should be happening. Now it's just watching to see the reactions from these areas, building our trade plan. You see what I'm saying? So relief across the board. We watch to see our reaction into our 40 edge. Sell side's either positioned here as we rotate up, or we will look for a secondary bid on the step back above. Got our rotation at our oscillation low on Russell, allowing for that rotation back up. ES as well into our pivot, and this is an easy scalp that you can play around. If you are uncomfortable playing into these low edges with relief or oscillations occurring in balance, that's fine. Play the secondary move, right? We can just wait for a secondary push. That's not an issue, right? We look for then this edge to then rotate. But understanding where to expect relief allows for really nice scalp trades. We are playing around buyers and sellers with very clear invalidations if these things don't hold. where we can flip our position to the other side. That is trading our balance. That is trading around balance at our edges. Don't be stupid and try to do the counter trend trade, right? Where you're looking for a breakdown of an edge before you've seen a reoffer or a rebid. Just play where the buyers and sellers are. That is how you trade balance. It's only a knife catch if you don't see, like, there are signs to things, right? Like there is a clear, like, it's a knife catch if you don't have an understanding of what's going on in the auction. Like that needs to be like if we're in a strong selling trend and you're just buying because it's a low, right? Like a knife catch there's a difference between a knife catch and a relief rally, right? Like you need to understand and have expectations in place and understand what's happening in the auction to take trades. Buying the edge low where our buyers have been identified and are known is not a knife catch. That is just buying the lower edge, right? If we're in a strong selling trend down and we have no target in place and you're just throwing bids at it for no reason without seeing a known buyer, that's a knife catch. There's a distinctual difference between buying a bounce low and just throwing money at and becoming liquidity for sellers, right? Like it's one has logic, the other is just gambling. And that, like you just said, like, yeah, true. I think it's just a mental thing for me and I have to work on. Think about the entire process that I just walked you guys through of why we're expecting what we're expecting, right? Like, it's not a crystal ball. It's not some crazy magic I have. I'm not from the future. So how can I look for and expect relief in these areas? Okay, well, I just walked you through every single thing that I'm looking for and the reason why I'm looking for it, right? That's no longer a knife catch. That is a trade with an idea and with logic and with multiple evidence behind it of why something should happen. You know, we create a structure that we trade around, and then we look for follow through. And if it is doing the thing that we thought it was going to do, then you should initiate because your trade plan is successful. If we don't see that bounce, right, and we don't see any sort of slowdown in sellers or absorption into that area, then the trade idea it's a scratch, right? It's no longer valid, and we look for the opposite. But like, as soon as we don't see a lower high here, we should be expecting the full rotation up because we know what the auction is. It is so important that you have an understanding of where we're trading, what to expect in these areas. If we know that price is oscillating in between these two zones, what needs to happen for this zone to no longer be valid? Right? When I refer to the zone, I'm talking about this area. If we're going to break down, what do we need to see happen? Well, we need this buyer to be gone, right? So if we know that, and we should be expecting a lower high to be put in, and then we should be expecting sellers to then break this area down. So what happens if we don't see that? Well, we know that if the seller isn't interested in this low yet, in a shift of value, then we're going to rotate back up in balance, right? It's just logical. So you have to always be talking through your trades and reasoning with yourself of okay, if sellers haven't shifted value, then value's still in the same place. If value's in the same place, then where are we headed? Oh, we're headed back up to our high, right? There's been no evidence that a shift of value is occurring. So we're going to maintain value. As soon as you have like those logical safeguards in place, you have trade ideas that you can then implement. You know what I'm saying? Another way to just think about this, Bruce, is like we have our edge of what we're looking for. Does it make sense here if you are looking to play around this edge, right? We are looking to initiate. Oh my god, this fucking box. This is our area of initiation, right? So you can either play this edge low with a slight stop below this if you're inclined, with this being your first target, doing something like this, right, with some arbitrary stop level, whatever you're comfortable risking, and then looking to play this up. Or you can be looking at it like this, which is understanding our auction logically, having your entry on the look back above this 40, because we're expecting sellers to be here, and then playing up into this higher rotation. So you're using this as a zone of control, where we're either watching for buyers to step back in, and we expect this to either be our where sell side is located, and then we stop out here at this low edge and then look to reverse, or we're looking for this upper rotation because sell side has failed here and bids have accelerated us through. But regardless, you've got yourself, a 15-point range of risk for a much larger area of return, right? We have an understanding of what this is going to look like, of where we want to apply risk for a rotation back up into our high of our auction. Understanding you can play off this lower edge with a very short risk, right? A very small amount of risk because we're at our edge, allowing for a much tighter area of risk, right? Where we're looking for bids to really be defined here. We'll really show interest at this edge. So our risk can be very much tighter. Or you can be looking to expand that risk, right? And allow for a bit more room to then build above by playing the top edge. If you want to play the top edge, right, this risk can then expand because we're playing around a zone. And that's where you get a much larger area of risk, right, where you're risking 10 to 15 points and you're playing on the break above and hold. That's your lower edge play. This is your higher edge play, right? Allowing a bit of wiggle room for the upper rotation. But regardless, right, like nothing has changed in how we show interest in this area. And remember, it's not just like, oh, we're playing a zone and that's why. We're playing a zone because Russell came into the bottom of our oscillation, and it's been oscillating for the last since open, right? And because ES is in our pivot, everything's at our pivot, so we should be expecting relief. And it's not just like, oh, everything's at just a random ass level. It's like, oh, no, this is also where our last buyer was on footprint. And this is our value low of that previous candle. So if we're going to hold an uptrend, this is where we're expecting bids to be because this is where they initiated last for this rotation up, right? So giving yourself a trade plan to play around and a catalyst of why something is going to happen is how you trade. Yeah. Just to like follow through on this little rant that we're doing because I think it was really good. Is like every trade's a gamble, right? But there's different opportunities, and there's a place where you should be looking to bet and where you should be looking to fold, right? Every trade's a gamble where you're putting money into a market and you don't have control because you're not the one moving the market. There are better opportunities, there are worse opportunities, but defining your risk and defining the areas in which you are looking to actually play in the market and where you're looking to be like, nah, it's not worth it. Those are the opportunities, right? That's the gambling aspect of it. You are gambling with money. You're putting money into a market where you don't have control, where there are lots of variables. But the more variables that you understand, the better your risk opportunity is, right? Pushing back up into our highs here on Russell. Just watching our interaction. ES has room into
Trump
our
says he just
value
completed
edge.
his call with President Zelensky. Just waiting for any details of this to come through now. Says the call lasted about an hour.
Just defining our levels a bit more on ES here.
Says the call was very good.
Russell coming up into our high. Let's see if we lose momentum again or if there's a shift where we build above value. Same thing on ES. How do we interact here into our PVZ, POC, and value area? Can we build, or is it another rotation down? NQ also into our resistance.
So this is in a Truth Social post. He says much of the discussion was based on the call made yesterday with Putin.
We're watching to see if this bid at 80s or 880 on NQ can maintain. If it does, then we can look for rotations up into our 900. Can Russell build at our higher low, right? Can we maintain our halfway back in this POC shift
Trump
that we're starting to see?
On track. So again, Trump, with regards to the ceasefire, says we are very much on track. Trump says I'll ask Secretary Rubio and National Security Advisor Waltz to give an accurate description of the points discussed.
Good bounce on Russell at our halfway back in POC shift. 80 bid holding on NQ, rotating up into our value high edge. See if there's anything more or if this is all we get. If we can hold our value edge here, I think we have one more leg up into like 915, 920. We're just watching to see how we interact here at our value edge. Yes, also at our 12 target and our value high, seeing if we can bid here at our POC. Oops. At our POC, and then look above for one more leg higher. Just watching to see if higher lows can maintain, right? And that's it. We understand that this is resistance. Russell's at the top of our range, so any more, any higher, our expectations should be limited. We have a 15 seconds till new 15s. We'll look to see if bids can maintain into that new candle open. If so, then that next leg makes a lot of sense. Just watching our rotation back into our POC shift here on Russell and our halfway back where we bounced last. If we can do that, we should look for rotations like this again, allowing for that next leg up on NQ and ES. Just maintaining our levels, right? Understanding where our risk is, understanding that bids are stepping up. We're seeing higher lows being put in and higher highs, and we're interacting now with our top edge. Can what was supply now be supportive? If not, right, then these guys will be absorbed, and we will look for this absorption to then lead to a reoffer and a rotation from sellers.
R1 is completely wrong. And the Nvidia CEO says demand for computing remains extremely high. Nvidia CEO Huang adds reasoning AI increases computing demand.
RTY full bounce where we thought it would. ES full bounce and push to target here into 15s. NQ still sideways, trying to go for breakout now, watching to see if we can get this bid over 900s for the rotation into 915, 920. First target has been met here on ES into 15s. Next target would be 23s on the hold of 15s for ES. Watching RTY here on the break, looking for a shift over value and a build in between this 85, 87 area, right? Our yellow box, just like we have pathed out. Understand that this is the top of our oscillation, so we need to see a shift of value here and ideally a flag build or anything more. NQ pushing into target now with the ability for ES and RTY pushing has given us the break on NQ. Upper targets have been met. RTY testing our VPOC now at that 86.7, 87, right? And I think we establish flags here unless we get some crazy bid happen. This is target again on NQ and Russell. So if we can build here above our value edge on RTY, I think that'll be a great sign that we want to continue higher. If we start to see a bit of a slowdown, then we're going to have to really chop this up and see if buyers can show interest. So we'll look for flags here and see if we can develop. If we can develop out a new node, then we can have another leg. I think if we don't see interest at this like 910 on NQ, rotations back to 900s make a lot of sense just to retest our node edge. So keeping an eye on that. Good build here above our value. Coming into next target here on ES into 23s. This is ADR low, sorry, the high ADR on NQ here, our edge, our first little look into it at 30. Next target would be 45, 75 for me, and then it would just be a rotation back to this liquidity above. I don't really have any levels in between. So just keeping an eye on this area. Some really amazing rotations today for FOMC. Very surprised. This is next target on ES into 23s and our reversion zone based off of PVZ. Good job, Grotto. Back to our 10 liquidity on NQ. Immediate bid found. Watching to see if we put in a lower high. Russell testing our value edge at 85.5. If offer holds here, then this might be it for the move. Maybe need to see a rotation back down to POC. I'm unsure. Basically, just keeping an eye on this pullback, right? From here, does this edge now hold for a rotation down? If so, right, then we have one more leg. If we can build back above, then it would look something like this, right? Holding this node edge and then looking up into next target. So really just keeping an eye on the rotation that occurs here. If we do see this zone now hold offer from this little bounce, then we should be expecting one more leg basically across the board. That would give ES one more leg down, right? We get a little bit of relief here, and then we look for one more rotation into our value edge, filling this node. So keeping an eye on it, looking for our next trade. Again, hit target here on ES, right at our reversion zone. Got an immediate signal off of stacked, PVZ and stacked right into there, and now into our rebid reversal line off of stacked here at 15s. Looking to see if we get that last leg down into our value edge to fill this LVN. Pen bounce holding, looking to see if we can bid above 20s or if offer hits here. New 15s opening now. Again, keeping an eye on Russell to let us know which way we're going. Can we build back above this edge? If so, then we get that one last leg up. If this fails here, we'll be looking for that re-offer at that 85.5 below, or one more leg down. Another good bounce at 910. Russell holding our upper edge, trying to build here. ES very flat, just holding our halfway back. See if RTY double tops here, or if we can do the full rotation up into next target at 89.3. If 20 offer holds on NQ, then one more leg down is expected. Just really watching our bid here at 10s. Bid at 10s needs to hold, or rotations down to 90 makes a lot of sense. This should be your first risk off if you're playing off of 10s as we push up into 26 here. Take off a little risk as this is our reoffer. If we can start to build above, we'll look for this 26-35 area to become supportive for a full rotation into 45s. Russell was able to breach the high finally with a higher low that's been put in place, allowing for this rotation to happen on NQ. So again, just a really good first risk off here. Next target on NQ 35s and then 45-50. Whatever happens first. This is our secondary target here into this area. Whatever happens first, either Russell coming up into next target or NQ coming into a 45-50. We should expect a bit of a loss of momentum as we push up into this. So if this loss of momentum is drastic, then this edge probably doesn't hold.
And Trump discussed a partial
Yes, coming back up into 23s. But no shift, holding our halfway backs, uptrend still intact, right? NQ held top of range, back down to lower range into our halfway back. Russell got our stacked sell signal and top of our oscillation, coming back down to our value edge. Just watching to see if bids hold or if we shift below. Watch to see if this 910 goes off or now on this look below for the rotation down to 90s. Super important that whoever is positioned here, if we want to continue higher, pushes below and then recovers this edge, right? We want these buyers back, or this is going to be our offer point, right? If this holds, then it's a shift of value from these buyers are now sellers, right? So this is a shift of value pivot. It is incredibly important that these guys become offsides in our low, and that we see a secondary bid step in above 910, and then we rotate higher, because now we have a catalyst with sellers offsides who have failed to shift value at this edge. If this holds, right, if this seller holds this, we expect a rotation back down into this lower edge here where this bid was last. So I see two potential trades here. I see a short with our 10 stop above 15, probably like 16, or a rotation down into this 80 to 90. I see this trade for the reoffer, and then I see our bid here on the step back above with our stop below 905, playing off our 910 edge for a rotation back up.
NVIDIA CEO says, I am confident that margins will improve.
Are we starting to understand these like shifts of value where our buyer becomes our seller, right? Just a very clear like shift of our bid. And it's like, okay, well, if our bid isn't here anymore, well, where was it last, right? And then it's like, oh, okay, well, we can look at our footprint. This 90 makes a lot of sense. This was our value edge where we found our buyer last. So this should be our first risk off for a short that we did off the shift of value, right? So this becomes our first risk off. Our secondary target becomes POC, where our bid was really very clear. And that's in our 80 edge. So now all of a sudden, this becomes our zone where we look for our first trade, PT, right? Because we have a shift of value and is zone to zone. And if we then fail here, right, then it's like, oh, okay, well, then we're going to shift down to our low, where our last buyer was, into this value low. And on like our daily profile, it's the same thing where it's like, oh, okay, what makes sense? If we just lost our daily value edge here, this is now resistance. We should be looking for a move down to POC, which is here at 72. So this now becomes our balance on the daily profile. And here's target into our 80, 90. Watching Russell to see if this holds now as resistance, like we talked about. If it does, then it's just going to be a move down to this POC. This is our fill of our LVN here on ES. Watching to see if we get a reaction. Bouncing from target here, rotating back up to our value edge. We'll watch to see if our offer is holding. It's just a rotation, right, into our POC where we thought a bid would be from the shift of value. Nothing new. Watching to see if we can recover this edge or not. All right, so we've gotten our full move now from our offer or supply into our high, our rotation from our 910, and then our push down into our 15-minute POC here and where we expected our bid to be. So now it's our full rotation back up to our edge. We're watching to see if the offer is still holding here and if that results in a lower low, or if we can recover and then bid off of this for a rotation higher. I'm gonna go grab some water. I'll be right back.
Trump says Iran must stop sending Houthi supplies immediately. So Trump making a post on Truth Social again. Iran must stop sending Houthis supplies immediately.
New 15s opening now. Bid really trying to step in here at 900s. We're watching to see if this rebid here can hold for a rotation back over. This is right back into our offer here at 9 tons. Again, bid really attempting here at 900. I think if buyers fail at this 900 edge to push back over 10s, what sellers are going to be looking for is to really try to slam this offer below 80.85. And if that 80.85 does go offer, it's going to be a much steeper decline down. So basically just keeping an eye on this rotation, right, on our edge here. I'm just going to get that gray box out of the way so it's a bit easier to see our pivots. This is first target here into our low at 80. If we can step below this and then reoffer it, we should see one more leg down. Just following our pathing, right? No change. Value high held on our daily profile, and we are just trading back to our POC here. If we can see this shift of value here at this 80 to 90, then a secondary rotation makes a lot of sense to the downside. But this is a very good first risk off based off of pathing. It's literally the same short that we just took, right? There's no change. We're trading in a balance between POC on the day and value high on the day with no look above. If we get a secondary leg down, right, then that's when we can start to look for a flirt with our value low.
AEQ and US heavyweight energy capital partners aim to invest over $25 billion in projects to power data centers.
Looking for a reoffer into 95 at our halfway back, and then a step below 80s for a continuation if sell side is going to show any interest. Excuse me. If you are trading off that 90, 95 edge, right, or retest into our halfway back, this is your first risk off. And now we look to see if we get a secondary from our hold of our 80 edge as offer. We will be looking for a seller here into our POC to value area on this candle. If this can hold offer, then we have one more leg down. Most likely. Russell in an incredibly tight oscillation. As we push down into 65, this should be your first risk off if you were playing the secondary move with our offer stepping down and holding a runner for a potential push down to VWAP at 40s on NQ. So just, again, first risk off here. The reason why we are looking at this area as our first risk off is because this is where the buyer was last, right? Looking at our POCs here on this last rebid that happened for the rotation up, this is just a retrace back down to that area. So this is a good first target. We see how we interact here. If this flips, right, then we have another rotation down where we then look to see if this will offer and then push down. But until then, very good first risk off into that 65, and then we'll watch to see what happens here. Back down to our lows off of another rejection off of our 80. Look to see if we can break this for our next leg. No change. $20 till new 15s. Are you guys able to follow along on these rotations? Do these make sense? Does it make sense seeing like these shifts of value from our bid to our offer and where they're located? I think it's been pretty good today with our relationship, like on how things are interacting. It's a very good day to be able to see these rotations live. So they're like very quick in their responses compared to like yesterday where things were taking forever to play out. These are much more instantaneous. Our reversion target is down at like 835, 840. That's kind of what I'm looking at. Just a VWAP, right? If we get this breakdown here. If this just continues to hold, then we're just going to be waiting for that pop back over our value edge. We can see that our we've got, this is our first higher time frame target, right? This 840. And then our 15-minute VWAP here at 806 on Globex. But this is our intraday VWAP here at 835, 840. So we're just watching to see if we can break this zone or if it continues to hold value. And remember, like, this is where that bid was pretty extreme, right? We were able to find that buyer, retest, and then push off of this area. So this is why we're watching it. And if this pivot flips, right, then it's just a shift of value down. So
in the short term.
This is just like, is this going to hold? Can we bid back over, show an interest here and flag for rotations back up with these guys off sides? Or does this hold and then do we rotate down, making this resistance?
Onshore.
This is how I'm currently positioned. On my runner.
Let's keep in mind at the top of the hour, do you get the daily press briefing at the White House with White House Press Secretary Leavitt. We will be posting the video out for this once it is available, since there may be some details of the Trump and Zelensky call mentioned in this press briefing. So again, that's coming at the top of the hour. We'll keep you posted with anything that comes through.
There's not really anything on the footprint chart. It's just a chart type on TradingView, Thomas. So the only thing that I've got on the footprint chart is our session VWAP and then our levels indicator from TFC, just to give me an understanding of where we currently are. Everything else is off. This is just an EMA that's on here. So I've got that on, but the levels indicator is just this, giving us an idea of like where our weekly AVWAP is, our monthly anchored VWAP, etc. Just to give me an understanding of like our overall positioning. But the footprint itself is just a volume footprint, so it's a candle type. And I just have it on the 15-minute. I can show you my actual settings though for the footprint so that you can also have them on your chart. There you go. Yeah, I just have adjusted the parameters a bit to make it filter out some of the noise. There you go. So you can just pause the video and then set it up like that. For indicators on everything else, let me turn off drawings just so you have an understanding. This is what our indicators look like. So bouncing right at our PVZ POC here and rotating right up into our halfway back to value high here off of our indicator. Just rotating in between balance right now. Same thing on ES, just our POC here and then rotation up into our value high. And for Russell, right into our value high indicator off of PVZ and into our reversion zone box where we expect resistance to be on RTY. So indicators playing out, telling you that we are trading within balance. And yeah, this is everything that's being displayed for you right now. So with our understanding of where our areas of interest are on footprint, with our indicators, we've got a really nice little mix of where we should be looking to trade and where we should be risking off. And from that, I then just establish zones that I then play around, expecting different kinds of moves. And I usually just draw them out like this so that people can follow along. You don't have to remember what I said. Yeah, that's huge, man. Sounds like you're on the right track. I'm live for free on Monday, Wednesday, Friday, so you should definitely uh, continue watching if you think it's helpful. Tune in on those days. We really want to see this offer step below 65s here and now try to hold it if we're going to get this next leg down anytime soon. Russell leading to the downside off of that look above and failure. We want to see a shift of value here. It's really important that Russell helps follow along, right? We've gotten our retests into our value high on ES. And now we're watching to see if this look below can now lead to more downside. Same thing on Russell from our look above, failure. We want to see now a failure at this edge and then a rotation down for continuation. Same thing on NQ, right? We got our look above, peek back into our offer, and then rotation back down to our bid. We need to see the shift below this for anything more. We need to see a lower high put in here, and then a rotation down. I'm still in this position, no change from the levels that I just posted or my chart that I just posted in Discord. Again, this is a balance area, right? So what happens here in this balance, right? We've got a very clear auction that's taking place between here and here, right? We just had a look above and a failure and then a rotation through our balance. So if we're going to push down, we expect sellers to put in a lower high here, and then we'll look for an offer below for a continuation, right? Top of balance now. So we've failed at our high of balance. We're now bidding at our low of balance. We're now watching to see if sellers put in a lower high. If they do, we then look for them to shift value below. If they shift value below, then we get our next leg down.
Trump gave Iran a 2-month deadline for a nuclear deal in a letter.
If this balance low holds, right, and we look over, then we're going to be looking for them to then hold this, right, because we see our bid is still maintaining here. We need to see someone caught off sides to break out of balance. It's super important. Right, so that's either us then taking out this high and then showing interest here at the top of our balance for this rotation up like we have pathed, or putting in this lower high here, showing that this bid is off sides, and then we rotate below, and then we see a value shift down. We need a break out of balance, and we need someone to be caught. That's our catalyst. So would it be break and retest of the range, or break and retest of the range, then enter, do you think? Well, what we're watching for right now, and these are kind of my ideas right now, is that we want to see for sellers, we want to see this lower high being put in, right? So our stop is above the previous high, and we are looking for this rotation or a scalp back down to our balance low. So this is your first look of a trade. Your secondary short idea is a failure here. So a look below, this is our pivot, this is our offer, this is your risk area, and we're looking for an offer down here for a break of balance with our bottom of balance holding as resistance. This is your secondary short idea. And your long idea right now is a hold of this balance high with our stop like this, our entry here, or a rotation up like this. Right? These are our three different ideas that we have based off of our zones that we're playing around. Why do we think that this short idea has potential? Well, because look at Russell, right? Leading down. So this is exactly what we wanted to see for this reoffer, right? This failure here at our highs, our reoffer into our pathing, and our push down. So we got our lower high that we expected, where our offer is able to put in that lower high. Now we need to see that break of balance at our lows for that secondary move down for that reoffer. Does that make sense? And the only way that this long plays out is either you're attempting here at this lower edge to play up into this resistance, or you're looking for that look above and then holding our balance high for that rotation back up to our value high edge. So this is our first range play that is just played. This is your first risk off if you're scalping based off of balance. And now you're looking to see if we get that secondary leg down. So my profit targets are just where previous buyers were. So the whole idea that we play around is where was previous value found on both our buyers and our sellers. And we trade around those participants. Because our job as retail is to trade around the participants who are actually moving the market. So if we can find short-term pivots based off of where they are positioning, we can then play around that auction, right? And there are multiple auctions on the day. There's a higher time frame auction, and then there are little micro auctions that take place in between price levels. So if we can identify where those buyers and sellers are, we can make money while they build positions. So we know a seller is positioned here. We know a buyer is positioned here. That means that we can take a trade playing around this seller and this buyer, and we call this a auction, right? We can make money in between these areas where they just build out a position. And then that becomes our first PT. If this buyer leaves, right, and it becomes our seller, and we see this rotation below, then all we're doing is playing down to where that buyer was previously before they built here. That's all this is, right? It's just understanding where these auctions are taking place based off of footprint. And then making money around those auctions. Yeah, there's so many different words, right? So whatever helps you visualize what we're talking about, it's all good. I prefer to think of things as auctions because I trade auction market theory. So if everything is just a distribution, right? So we have participants. Think of every auction as a distribution, right? And that's our volume profile. This is a distribution of trading. we have most traders, most volume in the middle of our distribution, and then we have a value low and a value high, right? Oops, this is drawn very poorly. And a value high. And that creates our distribution. So we know that most traders on both sides are taking positions here in the middle of the range, and we know that this is our value low edge of this distribution. This is our value high. So we want to be taking off risk into this high, and we want to be putting on risk into this low, and taking profit into this mid and into this high if we're long. If we're short, right, we want to be taking our first profit here into our mid and taking risk off into our low, right? This is a distribution of where people are taking trades. And that's how we play. We play off of an understanding of where these auctions are taking place, and then we create pivots or zones around them, giving us our targets. As soon as you accept that your one contract, right, your 5 contracts don't move the market, you're going to have a much better time trading because your positioning and your profit targets, right, are going to be built around the positions of people who actually move the market, right, allowing you to actually make money in the chop, right? The chop is where you can make a ton of money because you understand where the buyers and sellers are. And when we're in trend, it's very similar, where we're looking for pullbacks to where those positions occurred last, and then we're looking for rotations and continuation, right? Even in trend, the pullbacks are just where buyers were and find value at the time. So as soon as you change your mindset, all of a sudden your ability to make money becomes much better. So this is our secondary look right now that we're attempting. If you didn't get into this position off of our high balance, this is where, right, we're now playing off of this reoffer and this rotation down, giving you 2 very profitable trades just trading around our auction pivots. I'm flat here, guys. This is our 40 target. We'll see if we get more downside, but this was good enough for me. This is the full rotation. It's all about perspective, right? Like everything, there's a difference between what we consider chop and what we consider balance, right? If every market is just chop, if it's not moving in a singular direction, then that's a pretty poorly defined definition of chop, right? Like even in a balanced market, there are trading opportunities. Chop should be when we're trading in like, you know, a 5-point range on NQ, a 10-point range on NQ, and there isn't really a great risk to reward in the area in your trading. Balance, when we're trading between our value high and our value low, are very clearly defined areas where risk is being put on and off in a market, and you can trade around that very clearly. So it just depends on the time frame in which you're trading. When volume is still steady, right, and there's still very clear interactions and acceleration around our edges, that's not chop, that's just balance, which is what our market usually does, right? We're in balance far more often than we are in a market in motion during the regular trading hours. So understanding how to trade balance is super important because most of our market is in balance. Most of our trading is done in balance. So being able to trade balance is incredibly important. And understanding when balance is occurring and when trend is occurring is super important because you should have different strategies for those different day types, right? A market in motion or a market in trend or a market in balance. being able to recognize that should let you know how you should be putting on risk. Again, I'm flat here into 30 to 40. If this pivot flips, then we'll have one more leg down into like 800. But this is VWAP, so I'm out of positions. Where's your point of control? The daily point of control or the so I refer to two different kinds of POCs. I refer to the POCs off of footprint for the individual candles on the 15-minute, and then I refer to our daily POC. So it can get a little confusing if you don't understand exactly what we're talking about at any point. Yeah, no, yeah, and I understand what POC means. Again, I refer to multiple different POCs throughout the day. So these yellow boxes on footprint are our POC per candle, right? And then our POC on our daily chart is here. It's this dotted line. This is our NQ POC here at 877. And then we have an indicator that is also separating the day into 3 segments or 3 periods. And that creates a POC as well, which is our orange line here. So this is taking 3 periods or 3 areas and then creating a volume profile based off of those different market time periods. Right, so this creates a value high, a POC, and a value low. So there are multiple different POCs that I refer to on the day that give me trading opportunities. Yeah, and all of the stuff that we've referred to are different strategies that we've taught. So, yep. This is a full target here for our secondary short. If you are going to get another position or another leg down, we're watching for this VWAP, right? This area to now become our offer for this rotation back down to our day open and value low. So if you have the ability to hold a runner, right, we're looking for this last leg down here into our 30-second opening range, day open, and value low area for the full daily rotation down. You should be 90% risked off here at this point. If you have the ability to hold a runner, right, like this is where you're moving stops down more aggressively because our reactions can become a bit more extreme as we push down into this 800 to 780 area. This is our 15-minute VWAP, so we've now done a full reversion to our mean. So anywhere in here is where I'm looking for bids to occur. This is also our value low on the daily on Russell and our VWAP, so it makes a lot of sense to find a buyer here. And this is our secondary target and value low on ES here. So again, watch to see reactions.
Surely expecting the Fed reverse reprobation data.
But this is where we would expect bids to find value if our balance is going to continue to occur. If, big if we don't see any sort of buying happening at these edges across the board, we will be able to get into a secondary trade. But until then, you should be looking for relief rallies here, in my opinion, as we push down into these lows. If we shift value below our 50-minute VWAP, right, and show no interest into our day open, that's when we can then play this as resistance. But until then, I am looking for this to find bids. If we start to show interest below, right, we then look for this as our offer, and then we look for a continuation down, and then we can play to our lower targets. But in my opinion, it would
47
be
account parties take
incredibly stupid to not look for
$193 billion
value
the
to be
Federal
found
Reserve
here
Corporation.
into our value low. So let's just keep an eye on this area, see how much of a bid we find, or if it flips, and then we can play a secondary move down. I will be right back. Jason, how did you get to these concepts or a book? How did I get to these concepts? Just trading, right? You build strategies. It's just something that over time you learn. You want a book or something that would help you get a better grasp? I'm trying to think what's actually good and not garbage information. I think that, yeah, probably Trader Dale is probably your best bet. If you wanted a free resource, Trader Dale is probably a good one. Trader Dale's got a really great book that's free that would help you a lot understand some of these basic concepts. What about you? I mean, you could just subscribe, and then we have all of our lessons available as well. So yeah, that is also a thing you can do. But if you want like a free resource, then Trader Dale is probably your best bet. But yeah, we have thousands of hours of lessons as well. But I don't want to, I'm not gatekeeping anything. This is the book you should be looking for from Trader Dale if you wanted a really solid foundation in the things that we're talking about. This is the cover. This one's pretty solid, and it's free. I'm trying to think of another one that's really good. This is probably the one that I would recommend if you are willing to pay a bit of money. It looks like this. And there is a Kindle version of it. I think that this is a great book. This teaches you the basics of volume profile, market profile, and order flow. I'm a big fan of this guy as well. Between these two books, I think you've got an incredible foundation in something that's actually real and not made up. But again, yeah, we teach all of these concepts already. All right. Can you imagine that we found bids where we were expecting? Crazy. Let's see how much of a position actually gets put on, or if this is just going to be a little bit of relief and then a continuation down. Secret Mindset is good. That's a decent YouTube channel. The problem with Secret Mindset is that 90% of their videos are clickbait. They make their money based off of YouTube, right? So they have very well produced videos, but you have to understand that you are their product, right? So they're putting out lots of videos with lots of noise because they need to continue to put out content so that they can make money off of you. So if you understand that, you can then, they've got some great videos on in some of their content, right? But it's specific content. There's going to be 1,000 videos from like the Secret Mindset that's talking about like a EMA strategy or like an RSI strategy because they have to continue to put out content that people are going to click on because they make their money like that. But if you find like a specific video covering something that actually has edge and isn't just like a random video, then you're going to have a lot more success than just kind of like blindly absorbing their content. Yeah, well, and that's the thing, Thomas, like, right? Like there isn't, you're going to have a lot of similar content because the same things work over and over and over again, right? Like if they didn't work, people wouldn't make content on it. And there isn't going to be some secret strategy that isn't being taught. People are going to cover the same ideas. Again, like the books are these. I'll just put them in if you want to take a screenshot. I highly recommend these two. Roto, I'm pretty sure I've put both of those books in Discord. Let me see if I can find copies for you inside Discord. God, I have so much garbage on my computer. Oh, okay, yeah, there's your volume profile book. So that's the PDF version. So you can just you don't have to buy it. Let me see if I can find the Trader Dale one then. Again, it's just a free download. You just have to give them your email and then he'll email it to you, but as you posted that, I just found the PDF of it. Of course. Um, what of market structure do you use that at all? Yeah, it's all market structure. So the volume profile and everything that I just talked about is all market structure. It's just different time frames. The Trader Dale book goes into that a lot. A lot of the stuff that you're going to see in that book is talking about a more higher time frame structure. But anything that's using a volume profile is market structure. Yeah. All right. So it looks like our value low edge held. We rotated into target, and now we are holding our previous offer, or sorry, our previous bid as offer now, and we are rotating down. So we're just trading in this lower balance right now across the board. Russell VWAP is resistance. Until we push back above this, this is going to be our resistance. So this is currently our pivot, right? Same thing on ES. We're watching to see if we can hold below these value edges for continuations down. And then that is just a very clear shift back to our opening ranges. I am not in a position. Again, I exited into our target, and that is that. I'm going to go back to trading. We just did a lot of talking, and I would like to start paying attention to my DOM again. So let's see if we have anything else going for us here. If you guys that are in chat want a free version of that book that I just told you about, join the Discord and I'll put it in the free chat right now. Give me a second. The Trader Dale one, I don't have a copy other than the one on my Kindle. So I don't have that one, but you can get that for free on his website very easily. But I will post the other one in Discord for you. And here's the link to the Trader Day. Put that in chat for you. Sauce, I got to show you something that I've been working on. You're going to love it. What do you recommend for overcoming personal trading psychological issues? Dude, it's so hard.
Zelensky accepts energy strikes ceasefire.
It's so hard because it's so personal. It is so personal. FOMO, revenge trading. Yeah, no, I get what you're saying. We all go through it. The things that help you the most are reviewing and journaling your trades. But even that isn't an answer, right? Because you have a lot of personal battles that you're going to have to recognize, accept, right? And then traverse through. And it's really hard. Trading is something that allows you to either grow as a person, because a lot of underlying issues are going to come up, and you have to either accept them, recognize them, and then create strategies to get through them, or you can recognize them and be scared, right? Because all of a sudden you are seeing yourself for who you are, and some of the right, like some of your misgivings, and you will ignore them and continue to do them. It's such a personal battle, right? But the only way that you can kind of get an idea for how you can fix your mistakes, right, is by journaling and reviewing the trades that you're taking, right? You have to be able to see them and then fix them, right? Without it, you're kind of just aimlessly continuing to do the same things over and over again. So journaling is the biggest step that you can do. So after you're done trading on the day, going back and looking at the areas that you were trading around, seeing the mistakes that you made. Was it a problem with your risk? Was it a problem with where your stops were located, right? Or did you do everything right and the trade just went against you? That's also a thing that happens. But that's the biggest first step that you can do, is just starting to actually analyze the things that you're looking at.
Levitt says discussions in Saudi Arabia in the coming days on ceasefire, and we'll discuss broadening ceasefire to the Black Sea.
Right, and then once you...
The US could be helpful on energy plants.
Once you have an understanding of what you're doing, right, the trades that you're taking, are they random bullshit that you're trading because you thought price was going to go lower and you don't have any strategy or setup that you were actually looking for, right? Like, that's really important to recognize as well. It's like, oh, I was emotionally trading here. I need to stop doing that, right? Like, there should be no room for emotional trading. We take mechanical setups, right? So if you're still just trading garbage and you're looking for bounces at random points and you don't know why you're trading an area, that's something that you need to recognize. Yes, but we are human. Yeah, but the whole idea of why you learn, recognizing strategies and building out a framework for yourself is to make it as mechanical as possible. So yes, we're all human, and that's something that you need to recognize, but it's also something that you can really go out of your way to create safety nets for yourself to stop yourself from taking stupid trades, right? Like, yes, we are all human, and that's something that you need to be very, very aware of, right? Your human nature is what is screwing you over, right? Your greed, your emotional responses are what's screwing you over. Your gambling mentality is screwing you over. So if you can create setups for yourself and start to really practice looking for areas of interest where you have greater risk to reward, right? And be very mechanical with your trading, you are preventing that human nature from taking over, and you're stepping into a more mechanical mindset with your trades, which is going to really, really help you out in what you take and what you don't, right? And then it's just about compounding your gains based off of those setups that you're taking. So again, trade journaling is incredibly important because it's going to show you the areas where you are successful and the areas where you're terrible, you know? And it's going to be a bit of mix of both. And then you'll build out practicing those setups. And then the more you refine them, right, the more that muscle grows of what you should be looking for and taking, and the more trades that you'll be able to take and be successful with, right? That's when actual growth happens, and not just a lucky, knife catch in the low. Again, it's such a personal battle, but there are lots of basic solutions that you can do. You have to treat this as a job, because it is, right? This isn't something that you can just easily start doing and pick up and think that you're going to be successful in the long term. If you all of a sudden got hired for a job that you had no experience in, right? Think about it as all of a sudden you're working as a chef in a kitchen, right? But you have no cooking experience. Okay, well, it's like, if someone tells you how to make, asks you to make something, and you don't know the first ingredient, you don't know the ingredients, you don't know the recipe, right? What do? Well, you got to look those things up, right? So that's your first step is, okay, let's look up a recipe, let's look up the ingredients and figure out how we're going to do this. So we've just given you that information. I gave you 2 books, right? Now you read those books, or you follow my stream, right? You learn some strategies. Now you understand what the recipe is, right? Now you have a basic understanding of what you're doing. The second step is then actually cooking, right? You need to practice. It requires hours of experience. If you go into a job with no experience, you're going to need to practice a lot before you're actually good at something. It's incredibly important to recognize that you're going to be god-awful at this for a while until you gain experience and start to actually understand what you're doing. Without that base level knowledge, you're actually just gambling, right? With no edge. Right? It's like going to a professional poker game and playing. Like, sure, you're in the game, but you don't understand the probabilities of your cards. And so you have 0 edge. Yeah, you can gamble at the table, but the people who are next to you understand the probabilities of their cards and understand the risk that they're putting on. Well, you're just there throwing money at every hand. You don't know when to fold. You don't know when you're actually set up for success. It's super important that you recognize where you have edge, just like with poker. How old am I? I'm 30. I hate to say that out loud. Ugh. Gross.
So just ahead of the US interest rate decision, let's just go through some prep for you on the financial news feed. So general expectations, market and median analysts' expectations expect the FMC to keep rates unchanged at 4.5%. In the unlikely event that rates are cut, we would expect a large amount of strength in US stocks and weakness in the dollar, and government bond yields, as pricing in for the expected rate cut is undone and reversed. But if the hold is realized, attention will turn to the rate statement and the summary of economic projections. If the rate statement is more hawkish, underlying uncertainty about the strength of jobs market and inflation return to target, this could indicate to the market that the pace of rate cuts may slow down. If the summary of economic projections shows median Fed officials looking for less cuts this year than previously expected by the market,
Is that better,
this will be
Thomas?
viewed as hawkish, especially if it was joined by higher median inflation expectations and lower GDP estimates.
So this is a huge area for us, guys. This is ES VWAP and our look above on Russell VWAP. If we can show interest here and flag it out, we have a lot of potential for a rotation up. I'm really keeping an eye on this recovery of our pivot. This is our 15-minute POC off of our sell side candle. If we can see a bid here on NQ at this 40 level and see some success, we can see an upper rotation. So really important to see if this is a loss of momentum area or if we can recover this and see secondary buyers start to step in. Super important. See what happens. We're looking for bids to be here around this 30 to 40 if they're serious. If this 30 to 40 area doesn't hold on NQ and we don't see this bounce here on Russell, then this could easily be the top of this rotation. So we're keeping an eye on this and let's see what happens. We have a minute and 15 seconds till new 15s. Coming back down into our buyer here at 30. See if they are willing to hold it. Looking for that bottom on RTY. No bottom found yet. Looking at our halfway back. We're going to be watching for the recovery of this and then rotation up. We're going to get that continuation. If this fails, again, it's buyers offsides here, absorbed into our seller from before. So it is super important that we find this low and then recover these pivots, or we are going to rotate down again. A failure here is going to result in a sell side pressure and then rotation through back down to our value edge. So this is incredibly important that we see bids step in and then push back over. We're going to be looking for a secondary buyer here to enter longs, and we're looking for a failure here to enter shorts on a retest. These are the two setups that I'm watching for. Russell leading downside, no bottom in sight. Until we see that bottom, don't even attempt a long, right? We're looking for sell side to take advantage of this move. This is ES value edge. We'll be looking for a slight bid here on NQ and a reoffer into 25.30 if this is going to hold as resistance, just like we have on our positioning here. If that holds, then we'll have one more leg down back to day open and our value low. If we can recover our 40 edge and get back over, then we can see probably a bit more upside. So really just paying attention to this.
White House's Levitt says we've moved beyond mineral still.
No bid yet on RTY. Value low, holding as resistance. I don't see anything until like 95,800 here for NQ. Unless we are able to push back up into 25.30, I'm just not positioned for this. I don't see any buy side liquidity though until that 95,800 area. Looking at chat again. Yeah, Thomas, you've got a good read so far. Yeah. POCs help a ton for that, to give you a general sense of direction. So this is a return back to POC of previous candle, right? So we know that this is where there's interest. So it's why it becomes our target, which is exactly why I was looking for that 95 to 800 area, right? So it gives you a general idea of where we should be expecting a bid to be or an offer to be. But then
so just as we carry on then with the Fed
so
interest rates prep. So if the rate statement is more dovish, underlying increased confidence in inflation return target and satisfaction.
Was that it? But then we go to the DOM, right, for actual evidence that it is going to hold, right? So we create and we trade around general levels, and then we then look at the DOM to see if that is actually valid still, right? Because just because someone traded at a level previously doesn't mean that they're still positioning there. So we have our footprint and our volume profile for an understanding of where historically the value has been found.
Dissatisfaction in the strength of the job market. This could confirm that the Fed could go ahead with further rate cuts.
And then we use the DOM to
Also,
understand where that action is actually happening.
They expect the FMC to remain on hold at its meeting.
Yeah, DOM takes a ton of time.
So they said, with the FMC remained on hold on January 29th meeting, a strong economic environment and policy uncertainty left it operating in a wait-and-see mode. Economic activity has moderated since then. The labour market has continued to cool and consumer spending experienced a lackluster start to the year. Even so, we expect the FMC to remain on hold at the conclusion of its March 19th meeting. The cooling labour market has been gradual, and inflation, though it remains frustratingly above the committee's 2% target, has cooled. The core consumer price index subsided to its lowest year-over-year rate since 2021 in February. Furthermore, Powell has noted that the FMC does not need to be in a hurry to adjust its stance on policy.
So we're back to our day open here. Russell, ES, and NQ. We most likely just chop here until FOMC.
Trade Secretary Reynolds.
We'll see. But this is just back to our day opens. So the market has done literally nothing into FOMC. Back right to where we started. Which makes sense, right? This is basically just a day trading market while we wait for a decision to be made. It should be expected. DOM is one of those things that you learn once you have a basic understanding.
Discuss potential bilateral trade agreement. So about 10 minutes ago, until we get the Fed interest rate decision, forecast is for no change prior 4.5%. We also get the SEP, or the Summary of Economic Projections, alongside the FMC rate statement. Then we're looking at the median rate forecast then for the Fed. For the current is 3.875%. Prior was 4.375%. For the Fed median rate forecast in the long run, forecast is 3.125%, prior 3%. For the next 2 years, the Fed median rate forecast expectation is 3.125% from the prior of 3.375%. And the year ahead Fed median rate expectation forecast 3.375%, prior 3.875%.
Okay. He's going to be talking a lot, so there's going to be a lot of times where I get cut off and I'm just going to shut up. DOM is one of those things you learn after you have a basic understanding of volume profile and order flow. Without it, you're not going to recognize the areas where you need to start paying attention, right? So I think that going over the stuff that I posted in chat earlier is something that is needed as a prerequisite before you actually approach the DOM, because it's going to be incredibly noisy, right? And it's not helpful if you're just staring at the DOM for hours.
The conclusion of March meeting will bring an updated SEP. They expect the median participant to continue to reflect 50 basis points of further easing this year. Though if there were to be a move in expected easing, we believe the risks are skewed more towards 75 basis points rather than 25 basis points. Our own forecast calls for 75 basis points over the rest of the year, as we believe the slowdown in the labour market will lead the committee to cut in June, in addition to cuts in September and December. UBS say Powell is expected to deliver a stronger message on restoring price stability at the upcoming FOMC meeting. Rates are unlikely to be cut, though there is some risk of tapering balance sheet runoff. The key focus will be the SCP and Powell's conference. Given worsening inflation data, the dot plot median is expected to remove a 2024 rate cut with a possibility of no cuts in 2025. However, a one cut median remains the base case, and Powell's rhetoric is expected to be more forceful, signaling a do whatever it takes approach. The ECP unemployment rate may be revised down, while real GDP growth is likely to be marked lower. Improved productivity could lead an upward revision of longer run GDP growth median. Core PC inflation for 2025 is expected to be revised up, with anticipated 0.34% February increase sustaining higher inflation estimates. This could push median dots higher, effectively cancelling out a potential rate cut. The FMC is expected to project inflation reaching its 2% target by 2027.
Again, expect me to not be able to talk for the next like 40 minutes. This guy's going to be talking a lot at the FOMC.
And then with the UniCredit, the Fed, they say the Fed is expected to keep rate unchanged. Powell emphasized patience in adjusting rates. Interesting commentary here from Hamas saying the Israeli ground operation and incursion into Netrazarim corridor is new and dangerous violation to ceasefire deal.
Something like bookmap would be helpful. Yeah, it's a great way to visualize the DOM, but I still think you should have a basic understanding of volume profiles and how price rotates between value high and value low before you even approach the DOM. Once you have an understanding of how price rotates between value high and value low, you have an understanding of balance.
So going back to the prep, the economic outlook remains uncertain due to Trump's policy measures, including tariffs. A decline in real PCE was likely weather-related, but weak consumer sentiment and lower equity prices pose risks. Short-term inflation expectations have risen due to tariff concerns, with further potential trade actions expected in April.
Because bookmap is just going to be incredibly noisy as well without a basic understanding of what you're even looking at. But once you have that basic understanding, right, that foundation built, it becomes easy to recognize the things that you want. Again, the DOM is so noisy because it's literally where people are putting bids in and offers in at every price level. So if you don't know where to pay attention, right, where your zones are, where the areas of interest are, then you don't know when you should be looking at your DOM with a bit more patience, right? Staring at something over and over again, like think about how long you stare at charts and don't make money already. Right? That's not helpful staring at charts if you don't have an understanding of what you're doing.
Interest rate decision. Forecast sees the rate unchanged at 4.5%. We also get the Fed summary of economic projections, which comes with the median rate forecasts. The current year, the forecast is 3.875% on the prior 4.375%, with a range of 4.375% to 3.625% expected. For the next year, forecast is 3.5% on the prior 3.875%, with a range of 3.875 to 3.125% expected. For the next 2 years, the forecast is 3.125% on the prior 3.375%, with a range of 3.375 to 3.125% expected. And over the long run, the forecast is 3.125% on the prior 3%, with a range of 3.125% to 3%. With this as well, we also get the FOMC rate statements.
Something that I tell my guys in here all the time on Discord is time doesn't make you good at something, right? You can be spending a lot of time doing something and be developing terrible habits, right? It's all about practicing with intent. That is something that you need to take away from today, if anything. It's all about practicing with intent. You can spend 1,000 hours doing something without picking up anything that's actually good, right? You need to be very focused in your approach and what you're looking for, and then practice those concepts and spend time with those concepts. Practice with intent. Just because you stare at charts all day and stare at the DOM all day doesn't mean that you're actually taking in any information that's insightful. This is why trade reviewing is so incredibly important, because you have to realize the things that are fucking you up first. You know, where do you make your money? Where do you lose your money? Focus on those concepts first. The easiest way to profitability is actually reviewing your bad trades first, right? Because you might be just making some really simple mistakes. And if you can cut those mistakes out, all of a sudden you're cutting out a ton of the things that are holding you back, right? You need less trades in the day if you can cut out your bad trades first, your bad mistakes. It's such an important and easy concept to really push you forward faster, right? Is reviewing your bad trades, figuring out if it's a you problem or if it's an edge problem, like a strategy. If maybe your strategy is just actually dog shit and you don't know it, but you're not going to know that until you review. One of the easiest ways to become profitable or to start your profitable journey is actually looking at the periods of time in the day where you're taking trades and where you lose money. So if you can figure out where you have edge in the day and you don't trade in the areas where you actually usually lose money, right? For me, I make the most money between 10 and like 11:30. So that's the area that I focus in on the most because I make the most money during that period. The areas where I usually make the least amount of money are like 12 to 1:30, right? Lunchtime, where volume and volatility kind of slow down. And so I want to either be limiting my risk during those periods or not trading at all during those periods because I know I do not have an advantage during that time period. So if I can cut down my losers, then all of a sudden I'm already more profitable because I'm not trading in a period where I have no edge. It's the easiest thing you can do for yourself to become more profitable. Only trade during the periods where you have success.
1 minute remaining. I'll lead with the US interest rate decision.
There's going to be a shitload of talking here in a second. So the lessons are probably done for the next hour or so. Expect a ton of volatility and for all of our levels to invalidate. There is zero liquidity on the DOM right now and expect it to only get worse as interest rate decisions come in. Don't expect any trades until liquidity comes back into the market. You're only setting yourself up for failure and gambling with how liquid things are. Understand that. Once liquidity returns, we can start trading again. I'm going to put all of our charts on autofocus because I expect a large moves, and then we can reevaluate.
10 seconds. No change, no change. Rate remains unchanged at 4.5% as expected. Fed medium rate forecast current year 3.875%, 3.875% as expected. Next year 3.375%, 3.375% as expected. Next 2 years 3.125%, 3.125% as expected. But the long run at 3%, lower than forecast 3.125%. So looking to the market, seeing some weakness in the dollar and some strength in the S&P 500. So the Federal Reserve unemployment rate has stabilized at a low level and labor market conditions remain solid. The Fed expects the economy to continue to expand at a solid pace. They say that risks to both sides of its dual mandate in the statement no longer say that risks are roughly balanced. So again, saying there are risks to both sides, but have removed the roughly balanced element. So Fed projections show economic growth slowing in 2025 and inflation remaining further above the 2% target. The projections show that 4 of 19 officials see no cuts in 2025. 4 see 1 cut, 9 see 2 cuts, and 2 see 3 cuts. So Fed projections implying 50 basis points of rate cuts in 2025 and 50 basis points more in 2026. Fed policymakers see 2025 PCE inflation at 2.7%, up from the 2.5% in December, core seen at 2.8%, up from 2.5%. Policymakers see 4.4% unemployment rate at the end of 2025 against 4.3% in the December projections. Treasury redemptions cap will decline to $5 billion from $25 billion. Monthly redemption caps on MBS is unchanged, though, at $35 billion. The Fed say beginning in April, the Fed will slow the pace of balance sheet runoff. The committee is attentive to both sides of the risks of its mandate. Again, did remove the area where they said roughly balanced.
Keeping an eye on our halfway back.
So the Fed vote on policy included one dissent from Governor Waller, who supported no change on the policy rate, but preferred no change to balance sheet runoff as well. So again, Fed officials' median view of the Fed funds rate at the end of 2026 is 3.4%, unchanged. So for the end of 2025, they see it at 3.9%, unchanged. Longer run, 3% unchanged as well.
Watch for bids into our halfway back if we're going to hold this rotation up. Liquidity is incredibly poor still.
So again, Fed policymakers see 1.7% GDP growth in 2025 from 2.1% in December, and they see longer run growth at 1.8% from 1.8% in December.
Huge bid off our halfway back so far. Let's see if there's follow through.
See 4.4% unemployment rate by the end of 2025 versus 4.3% in the December projections. So again, seeing LSEG estimates come out now. US interest rate futures pricing in 56 basis points in cuts this year after the Fed holds the rate steady, unchanged from the prior release.
I'm out half here. One runner, 44 average.
So just again, looking into the markets here, strength in the S&P 500, weakness in the dollar here. SEP showed lower than expected GDP expectations and higher than expected inflation expectations. And the Fed's median rate forecasts were as expected, though lower than the prior December SEP.
I'm going to clean up chart just so we have our overall levels. We've marked the high and the low of our news candle as well as the mid. If we are going to maintain, we expect bids to continue to happen into our mid. I just got stopped out of my last contract there at 44, watching to see our reaction here again. Liquidity is still incredibly poor. The mid was the only area I was willing to try to trade on first attempt, not looking to trade it again.
See a 62.1% chance of the Fed resuming rate cuts in June, was 57% before the decision.
Offer stepping below the mid. Most of our sellers are positioned at 40 to 50, so if our offer is going to hold, we expect sell side to be sitting there on any sort of retest. With our failure at our mid, I expect a rotation to the low of our news candle. I'd like to see a reoffer of 40 to 50 before that happens, if sell side is going to start taking control. Understand your volatility right now, and lack of liquidity is going to result in a very poor fill on your spread if you are trying to market in or out of a position. I will be right back.
JP Morgan's Michelle says this is a dovish Fed.
Okay. Into our 40 to 50 here, watching to see if our bid can step up or if sellers absorb here and rotate us back down. Super important area. Russell holding our halfway back from the news candle. So same with ES. Bids were able to be found. You'd want to see a pretty incredible rebid here into this red area, right? Showing that these sellers aren't valid, and then rotating us back up. So looking for basically just a hold of this now for any sort of continuation. Liquidity is still very poor, but starting to step back in. We've got Jay Powell talking in 22 minutes. And then we should expect another bit of volatility. I thought liquidity was unfilled orders, like when everyone put stops right outside the range, because the YouTube guru said though. Yeah, so I would say that that is a type of liquidity, right? But what we're really after is just overall liquidity. When I'm talking about that, so there are limit orders all across the market, right? And that's what your DOM is showing, are limit orders, right? So, and the thicker that those limits are, the more liquidity, the more people that are entertaining each price point. And when liquidity pulls away, there's less participants at each point price level. So price is going to move more volatile because if someone with size is trying to fill an order, it has to go to multiple price points to fill said order, right? If there are only 2 contracts at 865 on the DOM, and there are only 2 contracts at 864 and only 2 contracts at 861, right? But someone is trying to market sell out of 100 contracts. How do we fill those orders? Well, it has to go through all of those price points until those orders are filled, right? It's going to fill at the best price possible. So you get much larger, more volatile moves in the spread because of the lack of liquidity at each price point, right? So we want to be trading when markets are very liquid because our price levels, our zones have a much more room to play, right? We can absorb contracts into those levels from all of the participants that are playing at those areas. So when we get into these news segments, most liquidity pulls away from the market and then is only going to be at our edges, right? No one cares about anything that happens anywhere else other than our higher time frame value, right? So where did we find our low? Well, we found our low into our 30-second opening range, right? So into our day open. And that's where liquidity was found and resting and was able to absorb these sellers. Where did we find our resistance? Okay, well, where we've been selling all of today, right, into our original short location, where we played this to the downside, right? So all of the liquidity in the market pulled away from all of the in-between levels and rested at our higher time frame edges.
As we're seeing from Wall Street Journal's Tim Morales on X, Fed officials marked down their forecast for GDP and up their forecast of inflation and unemployment, but almost all of them see the risks to the downside being on growth, and almost all of them see the risks to their unemployment and inflation forecasts to the upside.
And it should be expected, right? Just like it should be expected that we trade in balance pre-FOMC. Because higher time frame traders are not positioning into news with size.
For those interested.
It is a day trading market before FOMC. You should expect balance until a decision comes out. You should expect rotational trading in between two areas after the decision's out, and we have a better understanding of the market health, right, and where how the Fed is positioning. Liquidity will step back in, and larger participants will start positioning for a higher time frame ideology. Until then, though, they were going to be basically acting as market makers, allowing for and basically trading in between a balanced area, right? Allowing the liquidity that's in the market on a pre-FOMC day is most likely just being used for day traders, right? As a day trading market. You're balanced between two zones, you trade to those zones, and there's no one really positioning for a longer term setup. That's usually the outlook that I go into on days like today. Once liquidity comes back and we have an understanding of how higher time frame positions are kind of positioning for whatever the outlook was, right? Then we can step back in and think about trend. But yeah, when liquidity is poor on DOM, you don't want to be positioning as a small time or as a retail trader. You're more likely to blow up than to meet the lotto, win the lottery and get the right side of the trade. And even if you do, meet that, get in at the low, your fill is going to be so poor because of everyone who's trying to market in and market out with poor liquidity that your likelihood to actually get filled at the price point that you want is not high, right? There's going to be a ton of slippage because of how poor the liquidity is. So you need to be very precise in the areas that you are attempting, right? Or you should just not be trading at all until liquidity steps back in. It depends on what kind of risk you're willing to put on. And with the increase in volatility, your sizing also needs to change, right? Less liquid markets equals less size. More volatility is less size, larger stop. More liquid markets with less volatility is bigger size, smaller stop. Because our levels are more intact, right? They have more meaning. When there's a ton of volatility, you need to lower your risk. You need to lower your exposure. Because outsized moves can occur in more volatility. And your risk on your stop needs to be larger because of that volatility. You can't have a one-size-fits-all approach for different market environments. All right. What tie color is J-Pow wearing today, guys? That's the gamble. Purple with dots. Blue because he hates Trump. Green. Blue with dots. Okay. Red and white. All right. Purple, yellow dots.
So just a heads up for users, we have posted out the live feed of the press conference.
All right, we got a decent amount of options today. Let's see who wins. It's pretty bullish that we've taken out the high of this news candle pre-JPOW, to be honest. We'll see if that continues to hold true as JPOW speaks, but it is interesting that we did that. I feel like that doesn't happen very often, but that's very anecdotal. Last FOMC was such a non-trade. Like nothing happened. This one has a bit more volatility, but it's still very muted. I'm gonna delete everything and then just play off of indicators and our halfway back, because it's pretty meaningless for all of our intraday ideas that we had now. So I'm gonna delete all this and keep charts clean, and we can reevaluate with new liquidity stepping into the market. I'm gonna just remark our halfway backs from our news candle. What's happening? Trading view, man. Please. Okay.
So in about 10 minutes time, we have the FMC press conference with Fed's pal. Reminder, the video is on the feed for you to watch live.
Bottom left chart is NQ on the 15-second. And then NQ on the 15-minute next to it.
5 minutes ago to begin the FMC press conference.
Would the footprint work on a 1 minute time frame? I mean, the footprint works on every time frame, but when you say work, do you mean have edge? Like it would physically work, right? But you still have to develop a strategy around it, right? There'd be a lot more noise. A lot of footprint traders don't even trade off of a time frame. They're trading off of tick based, right? So lots being filled per bar. So it really doesn't. You have to develop a strategy around the time frame or the period that you're using for it to have edge. But yeah, it would work on a 1 minute time frame. But what you take from that information is really up in the air. I find a lot of edge for me personally on the 15 minute because I've created strategies to play around that time period. Some people find a lot of NQ traders trade off of a 5 minute footprint because they find a lot more edge in that. It really depends on what kind of trader you are, right? And the same time frame and same tick period or tick range is going to differ for the product that you're trading as well. Like you wouldn't be trading the same amount of the same range on an ES chart as you would on an NQ chart, for example. Right there, it's a little bit more in depth of a question than I think you realize. But any time frame can work as long as you have a strategy around that time frame, right? And a trade plan. You just have to build it.
Morgan's Michelle says the market is relieved that the Fed didn't jump to conclusions.
Like there are a lot of traders that would say that the 15-second chart has zero edge, and there would be a lot of traders who would say that the hourly chart has no edge. That it just depends on the time frame that you're used to trading and the setups that you've developed. I mean, that's all trading is, right? Whatever helps you cut the noise or see the things that you want to see. I find the 15-second to be incredibly helpful as I'm watching the DOM because I can visually see what's happening as I'm also keeping an eye on where that liquidity is resting and being pulled away. And I think I can, it helps me kind of identify those edges a bit clearer in correlation with me watching DOM. But like to someone else who isn't used to the 15-second chart, it can be incredibly noisy, right? There's so much chop, there's so much noise in what you're looking for. Right.
About a minute ago now to the press conference.
It really just depends. Again, it's practice with intent, right? Everything is just noise until you have a strategy around it.
Parrot currently live at the press conference.
I'm gonna mark some levels here in a second. We have resting liquidity at this 860 level. This is an incredibly important
Powell says
area.
the economy is strong.
Bro says that every second. Purple with white dots. He loves that tie.
Solid.
We have some absorption happening into
Inflation
907.
remains somewhat elevated. Powell said Fed made technical decision to slow pace of decline in balance sheet.
We have an offside seller at 42.
Powell says recent indications point to moderation in consumer spending. Also looking at the NYMEX closes here. So NYMEX diesel April futures settle at around $2.23 a gallon. Gasoline April futures settle at around $2.16 a gallon. WTI, NYMEX WTI crude April futures settle at $67.16 a barrel, up 26 cents or 0.39%. Fed's Powell says that it remains to be seen how uncertainty will affect the outlook. So again, survey shows a heightened uncertainty. Powell says in the labor market, conditions remain solid, and unemployment rate is in a narrow range for last year. Also, looking at the natural gas April futures settling at about $4.24. Powell saying labor market conditions broadly in balance, and labor market is not a source of inflationary pressures.
This 50 is a good first risk off if you are trading.
Powell says PC prices likely rose 2.5% in December.
See if we get some continuation.
Seeing US stocks extend gains, S&P 500 up about 1%. Powell says core PC prices probably rose 2.8%. And inflation remains somewhat elevated versus 2% goal. Powell says inflation expectations have recently moved up with tariffs as the driving factor. And Powell says surveys suggest tariffs are driving inflation expectations. Again, inflation expectations have recently moved up with tariffs as a driving factor. Powell saying long-term inflation expectations are consistent with the 2% goal.
Holy shit, this is the first time I've seen a slide at an FOMC in a while. It's usually just J-Pow talking. Fancy tech we got going on here.
Powell says new administration is implementing significant policy changes, and net effect is what will matter.
50 offer held, rotation back down to this bid here at 907. Watching our
Powell
edge at
says
value.
uncertainty around policy changes and economic effect is high. And I'm focused on separating signal from noise. Powell says we do not need to be in a hurry. So again, Powell saying that we do not need to be in a hurry. We're well positioned to wait for better clarity.
I don't have the news conference on for stream. He's just narrating it, so
Powell says uncertainty is unusually elevated and policy is not on a preset course. So US stocks extend gains further as Powell begins speaking. S&P 500 last up about 0.98%. Powell says if the economy remains strong, we can maintain policy restraint for longer.
the narrator
market
is ahead of the
we
news
can ease
conference.
if needed.
He's got a better feed than us, so I usually just listen to him with the stream muted with subtitles on, like I have right now. Because he's saying things that J-Pow says like 5 seconds later on the live stream. I don't know how he has a better stream than us, but he does. Offer still sitting at
Powell says that
950.
we have seen some signs of increased tightness in money markets. And market indicators suggest quantity of reserves is abundant.
How'd you find the narrator? We pay for a live news squawk service called Financial Juice. If you want to look it up yourself.
Dynamics and maximum employment goal.
And 40 to 50 still holding. Bid really trying to step up here. See if they can do it, or if this absorption continues to happen. RTY looking for a new high. NQES diverging a bit. Russell can put in a new high, then I think bid probably wins out on NQ. That's my guess. If we lose 30s and offer steps below, we start running into issues where we're going to have to come back down to this demand below us. That's my guess. So watching to see if offer can step below that 30 level and accelerate.
Some analyst from Credit Agricole in regards to the rate station.
Or if bid can step over 50s and then
just saying it would be
accelerate.
difficult to know how much inflation is from tariffs. So again, saying Powell says it will be difficult to know how much inflation from tariffs.
Offer stepping below that 30 and leading.
Assess inflation impact of tariffs.
Looking for your first risk off here into 907 if you are playing off of that.
Tariffs increases is challenging.
Secondary target into demand if this is going to continue.
Saying clearly tariffs are a part of it. So Credit Agricole, they say the updated Fed statement giving off stagflation vibes with growth projections revised lower while inflation forecast bumped up somewhat. The dollar is off to a tad, mainly based because of the statement and summary of economic projections come across as gloomier than the Fed's recent rhetoric. Powell says it's too soon to say if it would be appropriate to look through effect of tariff inflation. Powell says good part of marked up inflation coming from US tariffs. So again, good part of marked up inflation coming from tariffs. Powell says it will depend on tariff inflation moving through quickly and on inflation expectations being well anchored. Powell says sometimes it's appropriate to look past transitory inflation.
But still here at 907.
Powell says base case.
I think we go to 80.
There is no policy signal from tariffs, but we can't know.
But we'll see. This 907 bid is decently strong. Again, absorption into 30 to 40. As long as that's maintaining, downside makes more sense. If bid can maintain this 907, we look for that look back over 50.
In changing forecast amid high uncertainty.
So we're watching to see if this happens or if this happens.
Go like Powell. Powell says base case is that inflation will be transitory.
This yellow box should be incredibly reactionary, so risking off into this, it makes a lot of sense, at least a little.
Powell adding
this is our liquidity.
Expectations are mostly well anchored.
Offer being absorbed quite a bit into 900 so far.
And I don't see much increase in long-term expected inflation.
Sorry, I should redo this. Offer holds 30, and then continuation into demand. That's all we've got for right now. Back to our absorption here.
Powell says we will be watching inflation expectations very, very carefully. Also added that long-term break-evens are flat or slightly down. Powell says, I see pretty solid hard economic data.
Pretty solid.
Powell says inflation has started to move up partly in response to tariffs. and that there may be a delay in further inflation progress this year. Goods inflation moved up, trying to track that back to tariff increases is challenging. Powell says survey data shows significant rise in uncertainty and downward risks. Powell says we'll be watching very carefully for signs of weakness in real data. Policy is in a good place.
$40 bid needs to hold. Anything below 30s leads back to downside. Again, there is someone trying to absorb here into 40 to 50. We are looking to see if this bid can step up and hold for a continuation higher.
Powell just reiterating that the right thing to do is to wait for greater clarity.
$40 till new 15s. 70 is a good first risk off, I think.
Spot gold extends gains, hits record high of $3,048.42 an ounce after Powell comments. Brent crude futures settle
Take
at
off some of your position.
$70.78 a barrel, up 22 cents or 0.31%.
So if you're trading like 5 MNQ or 2 MNQ, right, you take off one into first target, move your stop up. What I mean by risk off. And if you only have one contract, right, it's first PT, so you should be moving up stop or closing. What I mean by it. Because everyone's positioned different off of what I'm saying, so I just talk about the intermittent levels.
Powell says, on balance, people wrote down similar forecasts to last time. And Powell saying it's hard to know how this will work out. So again, just saying relationship between survey data and actual economic data hasn't been very tight. Powell says cost of waiting given solid economy are still low. So again, costs of waiting given solid economy are still low. Powell saying lower growth and high inflation balance each other out.
The levels and what I'm talking about and putting on chart are just order flow. So that's why I deleted everything earlier. It's like we're just playing off of what's happening now. Because we have new participants stepping in and we need to be aware of them. Our upper target where we should be expecting supply is up into 89 to 20K. So I'm keeping an eye on that area. 89 to 2000 above.
US money market funds assets down $27.09 billion for the week ended March 18th, according to iMoneyNet. Powell says hiring rate and layoffs are both low. A meaningful increase in layoffs would probably translate quickly into unemployment. Powell saying overall labor market is in balance. Powell says layoffs here are meaningful to people involved, but not at a national level. Powell says, watching carefully for signs of weakness in hard data. Powell says strong goods inflation readings in recent 2 months, if persistent, must be to do with tariffs.
Yeah, no problem, Groto. Have a great rest of your day. Offer at 70 is still there. I don't have a ton of information yet. We know that bid at 3040 still holding where that absorption was occurring last. That flipped bid. 70 offer now, just rotating back. If we step below 30s and then reoffer it, probably going to be looking for a lower high and a lower low. But as of right now, just trading in a very tight balance. Should just be in runners from 70, or from your PT at 70. Upper target is our push into 90 to 20,000, and then above that, we're looking for 40 above that. It's on chart. 40 is our higher time frame target into ADR, but we're just keeping an eye on this.
Rounds here on the Newswise, there's a major update on Trump's upcoming crypto strategy. No clarity as to what that could be. We'll find out about it and relay that to you as soon as we can. But just being thrown around on the wires, no details added to it though. Powell says not right to tighten if inflation goes away on its own.
Jay Powell is answering questions right now from the news reporters who have open positions. So we could go either way, depending on what questions are asked. You know what I mean?
If an inflationary impulse will go away on its own, it's not the right thing to tighten policy. Powell saying it's a different situation and time now from prior episodes.
I use ADR on all my charts as targets. ADR is your average daily range. So it's the expected move based off of the last 10 or 14 days range that we've been trading in. If the auction is going to remain the same, or if price trend is kind of going to remain the same in the short to medium time frame, right? We expect price to rotate around ADR high and ADR low, based off of just a calculated amount of movement, right? That's our range that's given. So we want to be kind of taking off risk into ADR low or ADR high, depending on our positioning. And if we start to show outsized moves above ADR, it's usually a pretty great sign that we're going to start entering a trending market on the day.
Powell says there can be situations where the Fed's goals are in tension.
So for intraday scalping, I usually am exiting longs into ADR high. Unless I see some sort of outward move above ADR high, then we can look for a continuation in trend trading above. And I usually am exiting shorts into our ADR low, unless that is resistance, because the risk to reward is just not there anymore, right? Again, like, everything is about trading with edge.
If the Fed's goals need to be balanced,
this is target here on NQ.
It's challenging, and that's not the current situation.
And your risk to reward just goes down so much. Trying to short ADR low or trying to long ADR high until we've shown an outsized move above or below. It's much better to, you have statistically much higher chance to knife catch in that area for a rotation back in the opposite direction than you do trying to get a continuation trade.
Dow Jones up about 1%.
So that's why I usually am just exiting positions and then looking to reevaluate in those areas. Because it's just like our risk to reward goes down so much. good area to start closing positions and reevaluate. Again, higher time frame target here is 040 for me above. If we can start to build above this 89 to 20K.
Powell says forecasters have raised their possibility of a recession somewhat, but it's not high.
Average 4-hour range is what A4R is. So that develops intraday. We get 2 zones with the average 4-hour range. That's something that I personally made. It's not, I don't know how much information you're going to be able to find online, but it's something that I find helpful because it creates 2 zones throughout our session, giving us an area for pullbacks based off of the volatility on the day. Instead of a daily average range, it creates 2 zones for our 4-hour periods. I find it really useful for scalping. I don't know if anyone else uses it. No clue. It's just something that I started experimenting with, I don't know, maybe 2 years ago, after really developing out strategies around ADR and then trying different time periods to see if there was any like edge with it. I found the 4-hour to be really useful. Yeah, I'm out most of my play into this 20K. I have 1 runner left from 42. Looking for that 40 fill. My stop is at 930.
Expectations reading is an outlier.
My average fill is 942.50. And I have a PT of 040 above on my last contract.
Powell added that UMIT reading on high inflation expectations was an outlier, but we do take notice. So just in regards to rumors flying around with potential major update on Trump's upcoming crypto strategy, no source as to where this news has come from. Still trying to find it. Just seeing some further moves towards the upside on Bitcoin here.
This is ES ADR and NQ ADR.
So all major indexes up more than 1%. S&P 500 last up about 1.3%. Nasdaq up at around by around 1.7%, and Dow up by about 1.1%.
Russell is our outlier here, outperforming above our ADR already. So keep that in mind, that Russell leading this move up.
Powell says, I think we'll get clarity on outlook, but it's hard to say when. It's hard to say when we'll have a forecast that we can trust. And decisions and clarity will come in the coming months and over the course of the year, and we will adapt policy as we go.
Yeah, huge bid stepped in at the 20K. Don't you love it when all of like your levels going into an area start to play on deltas? Like we can see like how reactive they are once we flipped them. Like 70s, huge level, 50s, huge level, 20K now, huge level. It's nice to see that it's not just nonsense. $40 is just a fib target for me. 40 to 50. Other than that, I don't really have anything. Just watch for a rebid into like 20K, see if that holds. They continue to absorb sellers there. And look for that approach up. I will be right back.
Powell says we will know in a couple of months if higher goods inflation in the first 2 months of the year was from tariffs. Powell says that we're looking for direct evidence that particular pieces of inflation are caused or not caused by tariffs.
5 seconds till new 15s.
Powell says housing services inflation has been behaving well and moving down in a good way.
Just got filled into 40. And I agree with Sauce. Footprint also suggests supply into 80. So that'll be our next level if we can flip this 40 and continue higher. Got a lot of bid attempting here on our footprint. We can see that. A bit of a stacked imbalance created. See if they absorb into 40s or if we can rotate up into our higher target. Let's see if we can find or identify any pullback levels. I don't really see anything until that 20K as of right now. Yes, we've got outsized bids into like 32s. We'll watch that for a pullback as well if we come back down. And then let's just keep an eye on this liquidity here now that we've looked over. Your most bullish response would be a
Just an
hold
extra
here.
piece of research or views from Deutsche Bank post the Fed rate decision. They expect support for the dollar from reciprocal tariffs to fade as impacted economies respond with fiscal easing and US growth slows.
Watching to see if this 35.48 continues to hold bid or if we need to fill down into 20s. If we flip 20s, then I think a pullback all the way to 20K makes a lot of sense. So just watching initial reactions here to see if we can now hold what was our PT as supportive or if we need to see that larger pullback back down to our buyer.
Powell says, broadly speaking, forecasts point to weaker growth, higher inflation, which call for different responses and cancel each other out.
Buyers showing up at 40s so far, waiting to see if this is going to be absorbed or if they are able to hold. So far, it looks good for a hold into that 35.40. See if we can take out the high. That'll be our sign. If our high maintains with Russell also failing, it's a good early sign that
says sentiment has fallen
this is
off,
it for our move
the
short
economy
term.
seems to be healthy. Powell says drop in sentiment is partly to do with big changes by administration on policy.
In a strong uptrend, you don't want to be shorting. You're just looking for pullback areas, guys, right? So just a reminder that until we see our first signs of weakness and then a shift from below our bid, you shouldn't be looking for shorts. You should be looking for areas where price will pull back into demand for a continuation of our trend. We are currently in trend.
Powell says that some of flattening in Fed projections for core inflation this year is from tariffs.
35.40 bid still holding, rotating up.
Powell says flows in and out of TGA got us thinking about balance sheet reductions.
Is Sauce in your Discord? Yeah, so if you hear me call someone Sauce, that's, yeah, I'm usually talking to someone in Discord. You're gonna hear a lot of weird names because of that.
Powell saying flows in and out of the Treasury General account got us thinking about balance sheet reductions. And this was a good time to slow balance sheet shrinkage. Powell adding that if cut pace of balance sheet runoff means we'll make reductions more slowly but for longer. And I still think reserves are abundant. It's hard to see underlying signal with TGA going down. TGA is emptying, so reserves are higher. So you can't
Into
see
supply
underlying
here
signal.
on an NQ
So
into our 80.
Extend gains. Nasdaq up about 2.04%.
35.40 held and rotations in. This is your next
Powell
target.
says decision to slow balance sheet reduction is not sending a signal.
It says unable to accept invite. That's weird. Nice job, Sauce. Good trade, good trade.
Powell says we said we will stop balance sheet shrinkage somewhat above the level that is ample.
The link in the YouTube
Powell saying
description.
we are still far from that. We'll approach that level more slowly.
Let me check to see if that link's bad. Jason, can you copy and paste the TFC Discord link? I can't do it. But if you could, that'd be sweet. See if the link's just bad in the description. If it is, I'll just have to update it. No big deal.
Nasdaq 100 extending gains to about 2%. Powell says tariffs tend to bring growth down and inflation up. Powell says, I'm not dismissing rise in short-term inflation expectations, but there's no story of an increasing long-term expectations. Powell says there's no inflation story to tell 5 years and out.
Can someone in Discord copy and paste this link into chat? into a YouTube chat for me.
Powell says no plan to taper MBS runoff.
Bid is at
Powell
100s.
says we may or may not stop MBS runoff. Adding we haven't made any decisions. And we strongly desire MBS to roll off our balance sheet. And we said that we will stop balance sheet shrinkage somewhat above level that is ample. Powell says that we'd look carefully at allowing MBS to roll off, even after stopping shrinking total balance sheet. Powell says we are at a place where we can cut or hold at what is clearly a restrictive stance of policy.
This is our first little area where we've seen actual selling try to aggressively step in at 120. We'll watch to see if this flips below 100 or if there's any sort of shift, right? It's we have like zero structure here, so it's really just watching where these previous buyers have stepped in and where our sellers are. If they are able to hold this this area and this seller is
Powell asked if Fed might
watching
cut rates
100.
in May. Says we are not going to be in any hurry to move on rate cuts.
Well, still we're
See
watching
the
here to
stocks
see if
steadily
the
getting
seller
further,
starts to really
Nasdaq
show up.
last up more than 2%.
I think we got a reoffer into 110, 120. But we shall see. Again, this was like our first little order flow. We actually saw like an aggressive seller try to step in at 120, 110. $100 offer offsides. Or sorry, 100 bid is offsides. Offer stepping down again now into 90. Secondary little aggressive seller there, trying to hold below our previous bid. I don't see a ton here until we either come back down into this bid that's at 40, right, where this liquidity is.
Removing risk language from statement was not a signal.
So let's see if this offer at 70 to 80 holds on this look below. We should be expecting that rotation back down to 35.40 where our bid was if it does.
Imbalance to describe risks from statement isn't meant to convey a signal.
Offer is stepped down into 90 to 100.
And policymakers widely raised their estimates of the risks to Fed goals. Powell says Fed watches for material changes to financial conditions that are persistent. And that we want to focus on the hard data. Powell says if the soft data affects the hard data, we will know very quickly, but we don't see that yet.
Into our offer here, watching to see if they're going to be able to hold this 90 to 100 or if it flips bid for rotations back up. RTY finally found a local low at our rebid reversal line on our indicators. Same thing with ES, just holding ADR now is supportive. New 15's opening now. We need to see a very clear look over 110, 120 for me to feel comfortable in any sort of long. Or this is just going to be absorption, where we trap buyers here for a lower high and then continue down. Again, this was our first real area of seeing a seller step in.
Underlying inflation before tariffs was basically 2.5%. Powell adds that I do not see a reason to think that we are looking at a replay of the 70s. Powell says inflation is still running in the 2s with a pickup from tariffs.
Retesting that aggressive seller who is positioned at this like 110, 113 area. Watching to see if this is a lower high and if we can push back below 100s for a continuation down, or if bids can flip this again. We have a seller offsides at 70. We are looking to see who gets punished here, the buyers above or the seller below.
Powell says Fed staff has a placeholder forecast on effects of tariffs.
Offer was pretty willing to take in at 110. Pushing back down to our 70s. We need to see decent acceleration below 70s for more. And then it's just a rotation back down to our 30 buyer, 30, 40 buyer.
Forecast assume full tariff retaliation.
Without the acceleration through 70, you have to risk off into this low because this is where our last buyer is known, right? So we're currently in a balance between an aggressive seller at 110, 120 and a buyer taking in a bit of size at 70s. So those are your risk areas right now. We're looking for a break of either side of that for a
we're looking at pausing and at
move.
slowing.
Buyer at 70 is still very reactive, watching to see if we put in another lower high, seeing if sell side can shift value down a bit more to 100s now. Right? We have identified 3 levels. We identified our seller starting to position at 120, right? We then saw them start load the boat much more aggressively into 110, and we then identified our 100. So we're seeing lower highs being put in, and we are watching to see if this offer can step below and aggressively push us down to this 40. This is like the power of order flow, being able to watch and be able to see this stuff in real time. Watch to see if this guy gets absorbed or if he is now going to be offsides with the offer stepping down once again from 100s now into our 70 for this rotation into 30 to 40.
That concludes the press conference with Fed's power then.
Liquidity is incredibly poor right now, so please be careful. Yeah, YouTube is Monday, Wednesday, Friday for free. And if you want every day of the week and the chat or in the premium channels, then you got to pay. Sorry, bud. It is what it is. But if you want to hang out with me, Monday, Wednesday, Friday, I'm live for free. 3 days a week, still pretty good. Yeah, 7-day trial should, I don't see why it wouldn't. This is your rotation down to 30 to 40 off of our 70 offer, flipping that buyer and absorbing into them. This is target. You should be mostly risked off your short. Leave a runner just in case. This is buy side liquidity into our 30 to 40. So this is your just that seller, again, driving price down, right? Stepping over, stepping below that bid, and then offering it at a lower point, right? Yeah, 20K is definitely probably where we're headed, is what I would guess as well. Especially if 30-40 flips offer, but you should be risking off because I don't know how volatile it's going to get into there. Respect the liquidity that we have here into 20 to 40, see if 40 offer flips, and then we can rotate down for another 40 points. But again, this is PT. Huge. Yeah, exactly, Thomas. And I wouldn't want you to buy a sub without having an understanding of what we offer and how if you feel good about it or not. I'm a terrible salesman. It's not my job. I'm here to trade and just talk with you guys, right? So if you like what we're offering, I definitely think you should hang out with us for a few days, come to a couple of lives, see if you like the vibe. And if you do, then right, you know what you're getting. If you don't, then no harm. This is our push down to our 20K. Let's see if we get more. This is a super important area. But this is your secondary target here off of 40s. You can just scroll back in the VOD, but yeah, I mean, I can go through it again, no problem. I'm still in a position, so I'm gonna be a little spacey here. Ooh, that is not what I meant to click. Wow, looking at the website here, I thought you were just some Joe sharing your screen on YouTube that I can tell knows more than I do. What? What? That's funny. I hope after listening to me today that you feel like I might have something to offer. I'd hope. But maybe not. So this is how I traded this area. Once we identified that order flow, stepping in at that 121.10, our first signs of weakness, I started to look for a short, and then I added to that position on the 100, 110 offer, and then risked off into our 2000. And now I'm holding a runner for a continuation. So the idea is that we started to see some absorption occur into our 120, 110. I then immediately saw it was our first aggressive selling that we noticed, and I was thinking that that was probably our high because that was the end of the JPOW conference as well, which would result in a shift of trend now that our push was going. Our push is kind of done, right? Liquidity will start stepping back in. So once we saw that, we then were just playing around our orders that were below us, our levels, and then looking for buyers to basically be taken out and our offer to then flip to sellers. So that's I would highly recommend that you go back and watch the VOD for this area. This is the first time that I actually mentioned like an active seller. But I think you should really replay this area with that understanding. And then it's just a rotation back through our liquidity levels. That's all it is. Sell side is now aggressively pushing at 2000 and pushing back down into our 50s. If we breach below this 40 to 50 area, sell side's going to fully retrace this move, I think. This is where bid really needs to show their hand. This is our value edge on NQ into this area. So this is a great risk off. If we start to rotate through this area and we see a outsized bid step in, we'll look for a recovery. If we see the opposite, we should be looking at this as an incredibly strong reoffer for a rotation through our range. Our value edge is super important here to see if a bid is going to defend our value high on the day. It's the exact same thing that we were looking for here on our first look back into this 30 to 40 that we identified where absorption was occurring. If the seller starts to step back in where we saw them flip it, then we're looking for more downside back to at least our news candle and this demand that's here. If bid is able to maintain here where we were able to flip this absorption last, then we can rotate back up. So it is incredibly important that we see sell side step below this and then offer it for more, or this is where bids will start to maintain. With that being said, I am flat. into our value high edge, and we'll look to find a new trade. So I'm gonna just show you what I saw on Footprint Club, just so you have it as a with our price levels that we talked about. So I'm gonna pull up the footprint now, so you can see the areas that I was talking about as we were trading. So this is our first aggressive seller that started to step in off of that look into our high into 140. We started to then see sell side show a bit more size and loading the boat after we saw them take in these lots at 120 and then slap it down. So that's just us showing a bit more absorption and then playing down into our 70. And that's what I was looking for as our next target. We then saw a rotation back into our 30 to 40 area, which is our next target. We looked below and then saw these guys get absorbed a bit, and then we stepped down, and now we're back into this buying node here where we saw aggressive orders push price up from, right? This is where our original long was at this 40 to 50. So looking to see now that we've fully rotated this back down once we saw this seller starting to initiate. This has to be our target where we're looking to close positions until we step below this, right? So we have just done a full rotation back down, and it's just watching order flow and watching our DOM. That's all it was. So if we step below these buyers and show interest below this 40 edge, I'm going to be looking for more downside. But until then, it's better to just kind of stay flat and chill. Yeah, it was a very nice FOMC day. Very nice, very readable. Readable, legible, probably a better word. Edible? Yeah. Yeah, it's super solid RR there. Again, like that 30 to 40 is where we took our original look bid for a look up. So, and that's also like your value edge. Like it's just like a kind of a no-brainer to close shorts there. And if you wanted to scalp long to the upside direction, it's literally your daily volume profile trade where we are coming back down to our value edge to retest and should be expecting a bid. Yeah, I'm not trying to toot my own horn, but find me someone better. Find someone better who traded FOMC today. Shit.
I mean, I crushed it a bit on FOMC too.
Oh, okay, bud. Good thing you're here too. You know what I'm saying?
No, I caught the upside. I didn't catch the downside at all. I was just spectating.
I love the way that you trade compared to us because it offers such a different way to view risk, and I think it works so well as a an accent to have like that different perspective and another way to put on risk that's a little bit better than I don't know. I think it's such a compliment. I guess compliment is the better word.
Yeah, it's
What
good
we
to have
trade.
dichotomies of perspectives, right?
Yeah,
You
definitely.
understand like how to trade the market in different ways.
Yeah, that's Braxton, Jason.
Yeah, it's a weird setup because right now, like the gamma profile, the market positioning on SPX for Fridays, it's like heavily skewed to the upside, but all the data that I have shows that we typically reverse off of the move on FOMC. So I don't really know what to do onto Friday.
Yeah, I don't know. I was some of the my friends who are at funds said that upside was probably up into Wednesday, but you should be closing or putting off risk after Wednesday. It was their thoughts as well. So they seem to also think that positioning is going to get a little weird after today. But I don't know.
After Friday, I'm bullish, like at least for a couple of weeks.
No, that's good. Yeah.
Like right now, there's some for the Meg 7 at least. There's some negative gamma that are going to be flowing out right now. So should see some heavy flows into like right now it looks like Meta and Microsoft will get the most flows, and then Broadcom, and then from there Apple, Google, Amazon. Yeah, that's it pretty much. So interesting that we could see a heavy run in Meg 7 in the next 2 weeks.
That would be nice.
Yeah. So I put on that Google trade. That copy trade I posted this week with Google kind of sucks because it would have won big time if it weren't for that Google acquisition news. Like we'd be at like 172, 173 already today with this move. But that whole news yesterday kiboshed that whole move. So
What was the news? Is it for the Chrome browser?
they acquired Wiz for 32 billion.
Oh, okay.
Market interpreted that as too expensive, even though it's a great synergy acquisition with what they offer right now. They'll basically be the dominant cloud infrastructure cybersecurity offer globally, even more so than Microsoft and Defender. So that news caused them to drop from like 167 down to like 159 yesterday, and now they're at 167 again. So we had the 170 calls for Friday at an average of a $1.50, and had we actually caught this move without that news, we'd probably be sitting around like 174, 175 right now already. So
annoying.
Whatever, it happens.
Yeah. Damn. Are those still in play or not? I didn't even see the Google Play, to be honest.
No, I took them off this morning and then I repositioned to April instead.
Oh, okay. Yeah, that makes sense.
Yeah.
Got it.
Kind of like a game of chess.
Yeah.
Options.
Do you think VIX expiration tomorrow would affect volatility from tomorrow going forward? Braxton, you have any thoughts on that?
Well, it should be volatile in the first hour, and then it should unpin and cause probably a move to the upside, I would say, based on the current gamma positioning in the market. So, like my target for Friday is like 5,800 to 5,850 on SPX, based on what I'm seeing in the overall gamma positioning. If we do open up red, then probably not a bad idea to go long.
Yeah, once that unrolls.
Yeah, exactly. Because this is a pretty big expiration too. It's a quarterly expiration as well, right?
Yes. Yeah.
So, and then we should be pretty bullish into next Friday's OPEX too, because that's the OPEX where JP Morgan collar sits at. Yeah.
The old collar.
Yeah. The reason why it's bullish is because all those put options have already been monetized on that move down. So when you think about it from a market maker perspective, every put that's bought by one party, in this case JP Morgan, market makers have to short futures against that to dump the hedge out.
Yeah.
When JP Morgan sells those puts to monetize the position, that allows market makers to then buy back those short futures, which acts as a catalyst to the upside. And if we get it move over a certain point, in this case, 5,700 or so on SPX cash, you want to look at the positioning because and the gamma for the monthly OPEX, which is Friday, because that could point you to a very good like roadmap as to where we should go by Friday. Right now, it's like 5,800, 5,850. So.
This is good. They're getting YouTube's getting a little taste of you. Okay.
Is this a live stream right now?
Yeah.
Okay, I didn't even know. My bad.
No, you're good. That's where that question about Vixpiration was. So.
Oh, okay.
This is our offer here into 30 to 45. Basically, if we can step back over this, I'm very hopeful that we continue up. If offers sits here, I think that this is probably top of balance for it now, and then a rotation back down to like 20K. So watching this pretty, I'm pretty aware of this area, sorry. This is where we flipped bid and then where I closed most of my shorts on this way down, right? So if we can flip this again and see a bid step in again more aggressively and take out this supply here, I'm interested. If offer is going to hold, we'll be looking for that step back below 20s for a secondary move. So just really watching to see how we interact here. Again, the bid is at 20. If we don't see them step in here again, then offer is going to take advantage of this and rotate this back down to 20K flat. Offer was into that 30 to 45 that I just mentioned. We are now looking to see if buyers are able to absorb here, or if this is our secondary seller stepping in again to rotate us back down to value. So super important that we see this bid at 20 show interest, or that offer is going to hold. Just going to adjust levels with what I'm talking about. Braxton, someone said, I have no idea what that man just said, but he sounds right. You've got the confidence. It's funny. What do I think about harmonics? I think they have uses on the higher time frames. I think higher time frame harmonics have a lot of playability with if you use them with supply and demand concepts. But I think it's a little hocus pocus, right? Like it's a little, it's kind of like Elliott wave, right? Where it has some good stuff and a lot of bad stuff, because it's anything that projects based off of price action is a little, how do I say it? It's a little stupid, and to like trust it with actual like money, right? But it's good for projecting, in my opinion. But you should be using that with some sort of secondary system, like auction market theory or order flow, right? Like you need some sort of secondary signal. I think buying and selling based off of a Fibonacci level or a extended move in a direction like a harmonic, and then looking for a target is a way to set yourself up for failure by itself in nature. You still need to see active participants to actually get moves. But again, like I think it has uses for projecting. Like Elliott wave is the same thing. I think it has a ton of value in projecting potential price points, but it should never be your entry mechanism. You're setting yourself up for failure with that if it's your only variable in your system. When I was trading options, I used higher time frame harmonics a lot, actually, but in with supply and demand, right? We would be looking for like a PT based off of like a harmonic, but I've kind of pulled away from all projecting concepts other than just like trading node to node. It just makes life so much easier if you're just trading node to node. Like literally just a value trader at this point. Back to our 20 bid. We're watching to see if these guys are still going to hold or if it flips offer. No change. This is our value edge on our previous 15-minute candle as well. Failure here results in that rotation back down to our 90 to 20K level. If bid can maintain here and step over that 45 and actually show willingness to push higher, then we could see continued upside. But again, we've identified a new seller stepping in to hold this pivot. We're just watching to see if this buyer fails here. And we can see them attempting to aggressively push down off of that failure. Thank you, Jason, for helping him. Uh, 20 offer held, rotating down to our 20K to 90 level that I just talked about. Bid is either aggressively there or will flip back down to our value edge. So super important if we see a very aggressive bid off of this. Or again, a shift back down to our value for a full rotation of our balances.
The market's on close imbalance.
Pretty likely. We can see that bid attempting to step in. Expect volatility in 60 seconds with MOC. Atos? I don't know that platform. And what do you mean by better? That's such an open-ended question. I've never heard of Addis. What is this?
So we're looking now to the market on close imbalance. S&P 500 is sell side 1.3 billion. Nasdaq 100 is sell side 670 million. Dow 30 sell side 570 million. Mag 7 sell side 685 million.
Oh, it looks like it's mostly a cryptocurrency platform. Yeah, I don't have any experience with that platform, so I can't really give you any comparisons. Mm. I would say that TradingView probably has the worst data, as it is an actual brokerage. It connects to brokerages, right? So your data is pretty limited, and what you can access is pretty limited. Something like Sierra has multiple data providers that you can choose from. I'm guessing Addis probably does as well. TradingView is more of a general charting platform, right? I don't know Addis, again, like I have no clue. And I don't remember what your third option was that you said. I can't find that comment for some reason. But for I use Trade-O-Vate for my footprint charts. I have our indicators are all on TradingView, and I use that for general charting, but I don't trade on TradingView or have my brokerage connected to it. I use Trade-O-Vate for that. You think your guy's coming back? Seller at 354 in 40 seconds. All right, let's see him. Let's mark the time. So we expect a slap of the... We expect the offer to be here. I'm going to go down to a 1 second chart so we can watch him live. All right. Let's see if he steps in here again today. Here it comes. Ooh. Hate bomb indeed, but the opposite direction, surf. Yikes. Unlucky. Oh, he got you.
In 5 minutes' time now, at the top of the hour, we see the release of the US overall net capital flows. The prior read was 87.1 billion, and the tick long-term transactions prior 72 billion.
Bro, he's in the Discord. He saw you were getting short here at 40 itself, stopped you out into the high, and then went in the opposite direction. Get fucked. Yeah, yeah, of course. Do you use the community Sethmo volume footprint and the built-in Tradeovate footprint? I use the Sethmo. I have my own settings for the Sethmo, but yeah, I use that one. All of my settings and charts and everything are included in the sub. You also get my full setup on TradingView, a copy of it with my levels and everything that you have access to if you have the same subscription level as me on TradingView. You have basically my trade book is what it would be called. So you have my trade book for Tradeovate and TradingView. It is included. From this 30 bid, we're watching to see if 50 offer holds. I'm kind of expecting that this bid holds here. We rotate back up into 70 and then go for a push to POC into close. But I don't know if we have enough time. We'll see what happens here. But expect offer into your most aggressive offer is into 50. Your more likely offer is into 70. We only have 2 minutes left, so not a ton here. Yeah, we have a lot of bots who try to impersonate us. So you have to have a verified Discord.
It's a form of flattery.
Yeah, I guess so. I guess so. I think there might be a way around it. If you put out a help ticket, maybe Darian can help you with that. I think there's a way to get around it where we can like do it on an individual basis. I'm unsure. I don't handle that stuff. Yeah, I mean, I know you're not a bot, but it is a Discord security feature.
1 minute to go now.
Our 40
with the overall net capital flows.
Our 40 bid here is still holding. The reversion target is down into this 860, 880 area. I don't know if we hold this low or if we get this more dramatic move. I'm not positioned regardless. I don't trade last 10 minutes usually. Just keeping an eye on it.
Ten seconds. Minus 48.8 billion, minus 48.8 billion, and the US tick long-term transactions minus 45.2 billion, minus 45.2 billion. Prior revisions coming through for the overall net capital flows of 103.2 billion as compared to the original prior of 87.1 billion. And for the US tick long-term transactions, prior revised to 75 billion from the original prior of 72 billion.
There's your rotation into 70. That is close. So I don't know what happens
Japan's
now.
US
I'm not
Treasury
going to pay attention to it.
was at $1.079 trillion in January versus $1.060 trillion in December.
Sellers either absorb buyers here or they flip it and aggressively pop it.
China's US Treasury
Unsure.
secretaries holding was at $761 billion in January versus $759 billion in December.
But it is the expected move into close.
Intel shares closed lower by 6.9%, snapping 5-day rally. Boeing shares closed 6.8% higher in best day since July of 2023.
Later, Braxton. Thanks for getting on.
Yeah, man, of course. Have a great night, and I'll catch you tomorrow.
Peace.
Peace.
Yeah, no problem, guys. The next free stream will be on Friday. If you want to hop on and join us for that one, I'd love to see some of these same names in chat on Friday. You guys asked a lot of good questions today. Hopefully it was helpful. The VOD will be available later on today once I stop the stream. I think today was a pretty solid educational day. If you have the opportunity to just listen, if you're not doing much later, I think even just listening to this stream again might be beneficial for you. We talked a lot today. I'm going to have no voice for Friday. But really amazing questions today. So I think it was a good session. We had some great trades. And I will talk to you all tomorrow if you're premium, and Friday if you are not. Have a great night.